Take two. There we go. All right, now we're cooking. Now we're live on YouTube. That was quite bizarre. I had a little oopsie doopsie whoopsies there, and I was only talking to our friends on X for a hot minute. Yeah, starting off 2026 in a fancy way, huh? Yeah, you all got to miss my first sip of coffee. I guess only folks on X got to see that. So I started off by saying, obviously the market has some weirdness to it in a very low volume era right now. It doesn't feel like a Friday right now. It feels like it should be a Monday, but it's a Friday. We just lost 617 on the Qs, which wasn't great. We're now struggling to recapture 617, so hopefully we do. But yeah, I was saying this morning I was up past midnight with Lauren. We're watching The Walking Dead, and I haven't had coffee in like 2 weeks, so this is my first cup of coffee in a while. So cheers me to some coffee. Took a little break there to get some of the coffee anxiety and jitters out. But now we're nicely reset, coffee detoxed, and we're back to cook for 2026. Now, one thing to remember is the market right now is exhibiting these weird signs of either volume exhaustion because it's just the holidays, right? That's not unusual. Or, if we broaden out and we look at other stocks that are struggling to get back to some of their all-time highs or previous levels, it's possible we're looking at some form of, retail being out of money. That would be a lot worse. We don't really want to see retail out of money. We want to see the market keep pumping, people with extra cash able to cook. That's what we want. But I don't know that we are broadly seeing that. And so I think it'll probably take through the next jobs report to confirm that, retail's still got money. There's still borrowing power. There's still money to be made. There's still hope. And now I'm hopeful for the market. I don't want to see a recession, that dreaded R word. But, we've been struggling to get back to all-time highs here. So I'd like to see some push. Maybe the jobs report will give it to us. Not that I really expect this next jobs report will be a guaranteed smasher, but I'm broadly optimistic. But I still sit cautious. I sit at a 5.4 on the bear bull scale. So I'm by no means, leverage everything up and go all into this market. Anyway, so let's go take a peek at what we've got going on. We have, and I should also show you this. I think it's quite cool. Let me airdrop this over. This morning at 5:55, I took this little vid, and it's so interesting because, it'll come to an end here because the House Hack fundraise is over, right? The app's out, the coupons are expired, and the fundraise is over. But we're still closing out people's investments. And I took this little screen grab, but this is what it looks like, when it comes in. So it's like 100K, 100K, 20K, 20K, 30K, 30K, 20K, 20K, 60K, 60K. And the list keeps going, but then we started getting like names and stuff like that. And so I stopped recording because I didn't want to dox anybody or whatever. But it's pretty remarkable. These were just sort of like what the flows look like into House Hack. So quite a shocking end to the fundraise. And I know some of y'all are still in broker-dealer land waiting for the broker-dealer to process your paperwork. And I expect a lot more of that to be processed and cleaned up today. But yeah, very exciting. We're very grateful, and so thank you to all those of you. Okay, good. So now we have the Doomers. Let's go take a look at what the Doomers have for us. Here's almost everything Wall Street expects in 2026 and Tesla's EV crown. Tesla loses EV crown to BYD after second annual sales drop. Second consecutive year dropping. You know, I was actually really pissed. I have to call customer service because there's no customer service email anymore. But I looked on New Year's Eve, and I had like $4,000 of Tesla referral credits. And I'm like, oh, that's cool. And then I looked, and it said the next like $700 or whatever doesn't expire until January, like 17th or something like that. I'm like, oh, cool. So I've got 2.5 weeks to go spend some stuff on the Tesla store. All of my credits disappeared Jan 1. So they just literally rug pulled me on like $4,000 of credits, just disappeared Jan 1. And I'm like, what the hell, Tesla? What is this? So I don't know if it's a bug, but I guess I have to get on the phone and call customer service. You know, I wanted to see how many days I could go before having to pick up the phone and call a customer service, company into the year. And I guess the answer is half of one business day. So kind of a bummer, but whatever. Getting rug pulled by Elon. So Tesla vehicle sales for a second consecutive year, dropping Elon well behind BYD. Fourth quarter deliveries came in at 418. Trailing estimates, full year sales, for the full year, sales dropped 8.9%. Let's go, we'll write down some notes so we can kind of consolidate some of the notes. It does look like we just regained 617 on the Qs, but it is it's getting a little bit fussy, the market. So let's see here. Tesla. So we got 418. And I also wonder how many of those 418,000 were sold to like Starlink or SpaceX, deliveries. That puts us at year-over-year sales down 8.6%. And Wall Street broadly thinks these numbers are actually going to go up. BYD delivered almost 2.26 EVs in 2025. And that is battery electric vehicle sales. Yeah, those are BEVs, so not hybrids in that case. Unless, I don't know if they're counting hybrids in this case. Let me see if they say in the BYD article. So, up 7.7%. So those are many electric as it did. Oh yeah, no, that does not include hybrids, because on the hybrid side, well, you did 4.6 million deliveries total. That's year over year, up 7.7%, and then 2.26 million pure EVs, balance hybrid. Also roughly, in that case, it'd be 3-4 mil. There we go. Add that together. That's quite interesting. Okay. So, drop that into here. Okay. Tesla on Friday is expected to report that it delivered around 440,000 vehicles in the fourth quarter, down from 11% the year earlier, according to data compiled by Bloomberg. That would mean the company sold roughly 1.66 million cars for the year, second consecutive annual drop. BYD has faced growing pressure from rivals in China, an influx of new models. China's best-selling car maker faced stiffer competition from Geely and Xiaomi. BYD shares gained, gave up some of those gains, blah, blah, blah. Technological head start, hinted through breakthroughs, bloody, bloody, bloody. Okay. Overseas sales. BYD sells more EVs than Tesla. They've finally consistently taken over, which pretty much all year they've been in the lead. Otherwise, we were tossing the lead, and Tesla was in the lead for quite a while. So Tesla did lose the lead there. And let's see here. Electric vehicles, touting progress towards robo-taxis, AI emphasis. Battery deployments have never been better. This is true. Well, especially because you've got what's it called? An expiring tax credit this quarter as well. Tesla report last year. Yep. Nice growth in battery. That's very good. Tesla ended the year with anticipation for a cybercab. Right, but we didn't end up getting that. Blah, 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 blah. All right, yeah, whatever. This is really fantastic, though. I do like to see the energy deployments because I'm a big fan of the battery storage setups for not just munis, but also just keeping the grid more stable. Big fan of that. Batteries. So what are we up on batteries? We're at 14 point... Oh, jeez. Oh, forgot I had coffee there and I almost just knocked it on the ground. That would have been really disappointing. That's because I put my coffee where my calculator is. That's a mistake. All right, I guess my pants are going to be the towel. Take that wet coffee. They're black $17 shorts, so I really don't care. I just want to save the calculator. Yeah, save the calculator by bum swiping it. All right. There. It's all cleaned up. All right, we're good. So anyway, where were we? So we were at 14.2. Yeah, don't put your coffee where your calculator belongs. Up from 11, right? Yeah, divided by 11. That's 29%. It's pretty good. 29% on storage, or on, I'll just say battery deployments. We should say up. Up. All right. Good. Okay, cool. Let's see what else is going on. I like that. Pop that into here. Okay, very well. So then we have, what was this? These are Wall Street expectations for the year. Okay, so Wall Street expectations. Let's see what we've got. Risks around AI, but when it comes to the year ahead, few advocate walking away from revolutionary technologies. Right. Fidelity Institution calls AI the defining theme for equity markets. BCA warns of a potential, even as the most bearish firm warns of a potential recession, they stay neutral on stocks now on the tailwind of CapEx. Wow. That's actually interesting. So BCA has regularly issued bear reports. Like they're pretty good at bear porn. Let's shut that down. BCA we've seen as regularly bearish, while to see, despite their bearishness, they're just neutral stocks. Like, nobody wants to go bearish because it means you're going to lose AUM, right? No one wants to be bearish. It doesn't pay to be bearish on Wall Street. Okay, we know that. Yeah, and then JP Morgan says the biggest risk is not having exposure, right? That's in their annual piece that we broke down as well. With an inflationary trajectory trending lower, U.S. policy rates are likely to fall as the Fed took stock of a softening labor market. We have a supportive environment for risk assets. Still, optimism has a limit. Valuations of key assets remain elevated. How's Bitcoin doing? Because I'd like to see a breakout on Bitcoin. Oh, well, we can't even hold 617 on the Qs right now. Look at that. Another failed breakout. I mean, Bitcoin's still in that convergence. Somebody writes, no, Kevin, don't put your calculator where your coffee belongs. I know. Kevin showing his inner gamer. Yeah, I'm not getting up to clean the coffee. I got plenty of cloth on me. It would be crazy. I'm gonna talk efficiency here, If I get up every time I spill, you know how unproductive I'd be in the workplace? Come on. Value, what other good is clothing for? It's there in case you spill. That's what it's for. Valuations of key assets remain elevated, with many equities looking pricey, credit spreads tight. Yeah, also look at the 10-2. I think we're at 70 right now. Yeah. You know, I don't like this. Because if you go into history, you typically see those rises leading into recession. You know, we like once you get above 1.25, that's typically when you're in recession. About 1.25. So let's zoom out on this because it just keeps getting worse. And what we're gonna do is let's draw some lines. Okay. And let's see here. Da, 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 da. And it's so much harder to use the touchpad. Just go to the mouse. All right. So, recession. Hold on. Let me just get a straight line here. There we go. That's a straight line. So usually here. And then we'd have our inflections where the market officially knows we're in recession. Typically around these levels. Here. Oops. Here. COVID was so fast, right? But you also did. And you just consistently hit recession. And this is like the most anticipated recession. The exception of here, but we didn't come from inversion, did we? Yeah, no. Not right before that. Let me do a, like an orange line to show inversion here. Okay, so inversion would be right here. Okay, right. Yeah, so you didn't on this spike have inversion. So I'm only putting red arrows where you've had inversion. And every single time we ended up getting to 125. Without fail, 125 was recession. Every single time post on inversion, right? So, recession, 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 recession. Maybe this time will be different. Not great. All right, so somebody donated $10 to say I got $50,000 sitting aside ready to go into QQQ. Yeah, Rust Moments is right. I think if you're going to invest in QQQ, you should consider, I don't want to tell you what to do, but you should consider investing in QQQM. So there's a very small difference between them, but there's a big difference and a small difference. The big difference is that the fees are much lower. The expense ratio is 15 bips. I guess it's not much lower. 18 bips over here. But, I mean, for an index fund, that's a 17% discount, right? And the reason for that is, my understanding is, they advertise QQQ. They don't advertise QQQM. So the people who are more fee sensitive buy QQQM. The people who aren't fee sensitive, who are responding to the ads, buy QQQ. So, but anyway, to answer your question, you know, do you DCA $1,000 a week or do you lump sum? Well, typically Vanguard tells you statistically the best thing to do is just lump sum. The other thing is buying $1,000 a week is exhausting. Like you'll forget a week. I mean, maybe you could automate it, but it's a pain in the butt. What I'm doing with my kiddos is I'm kind of just leaving their money in cash. This is not telling you what to do. I'm just saying I have money in my kids' universal transfer to minor accounts as well, and I'm gonna, you know, now that the money is cleared, I'm gonna move, you know, the $7,500 or whatever to their Roth accounts. But I'm just leaving it in cash right now. like a money market or whatever. And if there's a big dip depending on what the catalyst is, maybe then I'll buy. If the market keeps soaring, fine. Oh well. But we're not seeing soaring in the market right now, and I think I'd rather get through some of the catalysts that we're going through. Does the 10-2 have any bearing on the Fed cut? No. It's more of the 10-2 is more of a symptom of the Federal Reserve's actions than any care to the Fed. I don't think the Fed looks and says, oh, the 10-2 is going up, we need to be more cautious. I think that's just it's just going to happen. It's kind of like, all right, we're sick. We're going to get sicker, right? The question is, how bad does the sickness get? We don't know. I when I went to Truckee, there's some person near me that was like coughing and sneezing all over the place, and I'm like, oh, I'm gonna get sick. I had a sore throat for a couple days, so I stayed away from the babies and everyone, but it never got any worse than that, which I was really grateful for, knock on wood. So, much like sickness, the economy can sometimes surprise you with its resilience. But anyway, going back to this isn't great. Yeah, I don't love this chart at all. So we'll put that on our data sheet. Remember, my data sheet, I really give it away for free in the Meet Kevin app. That's not to include all of the fundamental analysis or whatever that's in the alpha report. You already know that. But if you want this stuff that we're writing down, you could get it for free. Just go download the Meet Kevin app. Eventually we'll have a web app for it as well. It's not the highest priority right now, but it's on the radar. Yeah, look at this. Even Nvidia is giving up. It's just very little. What's it called? Buying pressure. This seems to be sort of where we sit. So somebody says this flu sucks. I've had it for 3 weeks now. The cough doesn't want to go. Yeah. I mean, it is that time of the year, right? And I don't know, maybe I'm dumb, but I don't do, I typically don't get like the flu shots and stuff like that. And I want to be clear, like I'm not like anti-vax. Like, I do think you should get your, like I think what they're doing to the hepatitis shots, with RFK and all this stuff, like I'm not a fan of it. I'm not a doctor, so my opinion, take it for what it's worth. But, I'm also not a fan of this kind of stuff. Like, I know people are into this crap. Longevity therapeutics, Agaproci 200 milligrams, Tadalfil, like all this bullshit. Like, I just go eat some eggs, man. Touch some grass, eat some eggs, have a cup of grapes. When's the last time you had a cup of blueberries or raspberries, Like, have that rather than all these. This is just making expensive urine, makes your liver work overtime, I think whatever measurable effects are fleeting blood test results that are quite riggable. I don't like any of this crap. I'd rather go eat some nuts and walnuts and flaxseed, but that's me. Who knows? I'm like I say, I'm not a nutritionist either. But yeah. So anyway, I don't know how I got to that. I was talking about the health of the economy, and all of a sudden, the health of the economy turned into like a spiel on like nutrition. That's the problem with me. I'm like a squirrel. So you should just at this point just unsubscribe. That's it. From now on, for 2026, I'm going to tell people to unsubscribe rather than subscribe. Valuations of key assets remain elevated. Yes, we know. There's a disconnect between positive short-term environment for risk assets and broader structural instability, says Fidelity. Global fragmentation, a depreciating dollar, Fed independence, CapEx trades themselves are themes to watch. Wait, so broader structural instability, that doesn't sound good. I wonder if this has to do with liquidity and the repo facility. Let me pull up repo. Damn it. Somebody says I'm subscribing, bro. Damn it. Somebody writes, if you read this, please make 2026 the year you take care of health. I think that's good. I think that's good advice for people. So make a goal, make sure you have like a vision board or something, and this is free too, but in the Meet Kevin app, we have the daily wealth tab, right? We have that's the stocks tab. Here's the daily wealth. I did this yesterday. I was talking like vision board. I don't know. I think this is kind of cool, but I had this vision board at the beginning of 2013 where I put like the 300 up on my wall, and I'm like, I want to make $300,000. I'd never made that much money before. I'd never even crossed $200,000. I just made $142,000 that year in 2012. And so I watched The Secret or whatever, and I put this 300 up on the wall, and I also wanted my first rental property. So I put these pictures up on the wall. 4 months into the year, I'm holding an open house. A neighbor comes by to my open house and says, would it be weird to have 2 for sale signs on the same street? So obviously, I'm like, oh my gosh, this is like a free listing. Let's go. I go over. I end up offering to buy your place because, it was like a grandma house. She's a grandma. It was perfect. A few hours later, I went there with Lauren, and the lady screamed. She's like, Lauren! I'm like, what the hell? She hadn't recognized her since elementary school, but somehow knew this was Lauren. So it was crazy small world, but we ended up buying that house. It was our first rental. And then that year, I banked $352K in commissions. So I'm like, it's time to do it again. I need a vision board. My printer wasn't working yesterday. I got to shove an Ethernet cable up its ass or something to make it work better. But anyway, I was trying to print this, but I want to print this giant shield, the Roman scutum, kind of like Spartan kind of style scutum here. But I want it to say 20 million ARR for house hack. So I want that to be on my vision board this year. So once I get the printer to actually print a full image, that's going to be up on my wall somewhere. I think that'll be kind of cool. Maybe I should just buy a scutum, like a real one, like maybe that'll actually fulfill it. It's like, why have a picture when you could have the real thing? I don't know. I usually like saving the money. And it's kind of like when I had the RuneScape coin stack, up in that corner for a while. But I mean, look at this. One size. What is this? Roman scutum, 42 inch. I mean, it actually kind of looks like crap, honestly. This looks like it's just like a curved piece of clunky kind of wood. It doesn't even seem like that high quality here. Like they kind of beat it up on purpose. But, $270. It's still kind of cool. Here's one but that's smaller. I mean, they got a bunch of them. These things are cool, though. I don't know where to even hang crap like this. Here's another one. New low price, $229. See, this one looks a little better. A little better. But it's also just, curved wood. And they put a little, brass trim on the side. They did a nice job painting it, though. Not bad. The little buckler in the middle is not that great. But, whatever. That's kind of cool. All right. So, we looked at the repo facility. This is obviously somewhat of a sign of stress. Of course, the Federal Reserve will brand this as, oh, it's not stress. It's actually just, a sign that we need to stop, vacuuming up money. So I don't really know what to make of it. But I think Fidelity has a good point when they say there are fragilities. I'll make a little note here. Fidelity is likely on point, suggesting there are broader structural instabilities. I'm somewhat concerned that come on, here we go. That people are out of money. I think the liquidity drain in private credit is just an owl in the data center, canary in the coal mine, for liquidity constraints coming to stocks. So I'm not convinced this price action down on the Qs over the last few days is just because of the holidays. I think it's a sign of a broader liquidity constraint, which is somewhat concerning. And then obviously, the Fed brands repo usage as normal and not a big deal as they try to destigmatize. But then it makes you wonder, so what came first, the chicken or the egg, right? Is repo usage up because Fed destigmatizing or because problem in the liquidity, right? And so we don't know because of their sort of branding of it. So I think that's actually a good line there from Fidelity regarding this this instability. Mind you, also I'm a big fan of global trade. I actually think the free market is great. So I'm as some are free speech absolutists. I'm pretty deep. I'll just say pretty deep in the free market absolutist camp. My take on, just briefly on the Minnesota stuff, Minnesota fraud, simple. If you really want to simplify it into a sort of one-liner, is how about this? How can I not spell Minnesota? One T. Apparently not. A simple solution. Get the government out. If people are too poor, then offer vouchers, right? But let childcares actually compete for customers, and then people can decide where to put their children based on quality rather than government subsidies for the individual childcares. You shouldn't subsidize them at all. Let them compete. Let the best childcare win. Let the free market handle it. I don't know. I think that. I think usually when the government starts allocating resources, it's bad. I think the government sucks at allocating resources. I'll put it this way. I think the government sucks at allocating resources. That's it's never worked in the history of tyrants allocating resources, and it doesn't work on really any scale. But I'm a very laissez-faire kind of guy. The free hand, right? The invisible hand. So anyway, all right. Bloomberg's annual compilation. Momdominy is offering free childcare. Yeah. Well, that's actually a symptom, right, of the problem. Momdominy offering free childcare is a symptom of the problem, because unfortunately, that's the downside of a free market is that when the market is bad for poorer folks, you actually end up instituting more government, and you end up just making the problem worse. I think, just briefly to finish the point, government should offer no money to businesses. Businesses should be mandated to compete. If somebody shows up and wants to enroll their kid, they should be begging to get that kid to enroll in their business, like any good business would. What can we do to earn your business, right? That's the business mindset. And if somebody shows up with a food stamp equivalent, right? I don't care, your money's green here. Whether I turn that food stamp into $100 or you give me $100 cash and it's $100 in my bank account, as a business owner, I don't care. I just want to service you, right? And I think there's less, waste in that. Don't get me wrong, there's still going to be fraud then on, food stamp fraud or whatever, voucher fraud. That stuff's always going to happen. Just people steal. That's unfortunate, but it's true. Okay, so Bloomberg's annual compilation of outlooks for the year ahead features more than 700 calls presented here for easy analysis and comparison. They talk of an environment where AI spend and government policies are adding fuel to an unusual stage of the business cycle. They argue inflation won't be tamed as a result. Private assets will continue their ascent and the dollar will continue to decline. Are we recovering yet on the Qs? No. Quite the opposite. So, in my alpha this morning, I said that if we lose 617, we're probably going to 607. So you want to watch that. Your 2-year falling below. Yeah, but we're only like 25 basis points below that, right? This weekend, by the way, also, I signed up for, and it's a test. But it's very expensive, so I only signed up one seat, but I signed up a seat for the AI Ultra for Gemini. I have not yet noticed a difference in the quality in the responses. But let me see here. I put yeah. Let me find it here really quick. I like 2 days ago, I think I either like severely sprained or broke my pinky toe. I fell out of my greenhouse like an idiot while holding my nearly 2-year-old son, Jay. And, I did one of those like, no falls where like you're holding the child's head and their body and like you're rotating them away from the concrete and then you're just taking all the hit. That was quite unfortunate. But where was it? I thought I didn't. There it is. Market crash debate. Right. So I put this into Gemini Ultra DeepThink. And so I put the entire debate in. I didn't put the screenshots in. Let me put the screenshots in from Friday. Not Friday, today's Friday. What am I saying? The screenshots that we put in, that's the only thing I didn't put in. But I asked the DeepThink to evaluate Gemini and GPT and pick a side. And I thought, it's going to side with itself because, it's sort of itself. It's like another version of itself. It didn't. It also sided with GPT. But I will put those screenshots in. Do these screenshots I didn't attach originally, but were part of the debate, make any difference? Okay, DeepThink Pro, right? So this, you probably tripped because of the shorts. No, ironically, I mounted this bracket to the door of the greenhouse, and my mount was really well installed. The mount is fine. But the actual weld from the Amazon, metal bracket snapped off. So like there was this giant gust of wind in like a rainstorm. I grabbed the bracket to like stabilize myself as I get out. The wind comes, rips the door out of my hand. I kind of like tilt to the side. My hand puts weight on that bracket. The bracket breaks off. As the bracket breaks off, not the mount was great, but the actual weld snaps off, that's when I lose my balance and fall. And I'm like, well, that's shitty. So I landed on, my toe and my elbow, but it's fine. I'm fine. I'm in pain, but the kid didn't even care. Like Jay's just like, cool, Dad. Now what? Like he didn't cry. He was nothing because he was perfect. But it's nice. It's nice to know. Like I always feel like we think, if I fall with this child, am I going to protect the child? Human nature takes over, and everything goes like slow motion, and you actually do save the child, which is kind of cool. Kind of a cool little human feature, I guess we just have. But anyway. This was a heavyweight bout between a macro strategist, Gemini, and skeptical quant. As the arbiter, I have reviewed the arguments against 4 pieces of evidence you have provided: the rolling top, the yield curve, the repo chart. Round 1 goes to Gemini. The everything top and quiet QE. It caught the narrative-fitting, twisting technical data to fit a doomsday scenario that your charts do not yet support. So it actually says that the everything top story is compelling. However, on the burden of proof side, GPT wins. So GPT was basically too dismissive. Where Gemini did pick up on this textbook defensive distribution pattern. So I thought that was quite interesting, but then it gave the rest to Gemini. So that was sort of a, for the $100 or whatever. What the hell is this bullshit? What am I paying $100 for? A lot of people are using deep think right now, and I need a moment to sort through all the deep thoughts. Please try again in a bit. Oh, that's some bull crap. What do I pay for? Now I gotta upload all those screenshots again. What a pain in the double A. Well, it's been a bit, so I'm gonna try again right away. Rate limiting. Barely even used the product. I'm a new customer here. Now it's on it. Check back with, okay, cool. Now it's working. All right, we'll let that keep cooking. We'll see what it comes out with. Anyway. I once had my son on my shoulders and slipped. In a nanosecond, I subconsciously decided to eat it all and hold my son steady. Yeah, good for you. Yeah, I do think it is a... Kevin, please use abacus. You have no clue, buddy. I love it when people like condescendingly write stuff like that. You have no clue. It's sort of like it's like any argument that somebody wants to make. And are you talking about this? A carbosi? Is that what you mean? Because you couldn't spell it right. But anyway, anytime somebody doesn't agree with your thinking, it seems like the first reaction is, well, you just don't understand. Our carbose is used in levels or people with type 2 diabetes. Dude, I don't have diabetes. I don't want this shit. I don't want your chemicals. Bro, I'll go eat some more fiber and fruit. That's what's nice about fruit. Fruit's like 90+% water, right? So it actually like regulates the fructose exposure to your and reduces the insulin spikes because of how much water and fiber there is. But anyway. Maybe spell your pill right, and then I'll consider looking at it. Maybe spell it correctly. Anyway, so what is this? So talk of an environment where the AI spend and government policies are adding fuel to growth at an unusual stage of the business cycle. Yeah, I do think this is an interesting line too. We are, you're fueling the top. Is really what they're saying. And this is a compilation of 700 calls. So, I think you can actually take away from this that we are, basically, like if there's a raging excessive fire going on, we're kind of still adding fuel to it. Adding fuel to what is already quite euphoric. I find that quite interesting. Very interesting. Okay, so any way we could get insights into the next jobs report? Yeah, I actually, when we did this in the course member live stream this morning, I don't want to show all the alpha, but in the course member live stream this morning, we were actually trying to look at the labor market. And so we were we were doing an analysis on paychecks, and I'm willing to show one of these, because we do quite a bit of analysis every day in the course member live streams. But what we looked at here, paychecks. Let me paste that picture in here and I'll show you. So here, Paychecks was saying that, their ability to attract clients is a little harder, and they're suggesting that, macro's holding up. So, for them, Paychecks is really complaining, like, they see labor as stable, which I think suggests the next jobs reports won't show a fall off the cliff yet. So I'm not really worried about a really bad jobs report. Suggests we won't see a bad jobs report yet. However, a lot of complaints about shrinking PP basically at the company, which could be idiosyncratic, but a lot of complaining about macro, businesses saving money, right? Macro complaints, businesses shopping to save money, blah blah blah, right? But no cliff yet. But this is a red flag. This right here. I don't like when they analyze 700 calls, which they probably just ran through AI basically, which is fine. The calls have been divided into sections covering key themes and assets. Each section has a short summary, and the calls will load in approximate order based on the level of conviction displayed, with the highest conviction calls first. The filtering tool will allow you to view the call. Oh, this is sexy. Okay, filter by instant. Oh, yeah. Oh, talk dirty to me. Oh, this is cute. Okay, scroll through the calls. All right. So highest conviction gets shown first. So global growth to remain on track. Tariff pressures will take a bite further out. Overall effects are manageable. Hot valuations may increase volatility. So the bull case is pretty clear, right? The bull case is obvious. The bull case from Wall Street is tariff volatility down and tax benefits and AI capex, right? Right. So that's cool. Our ancestral diet is based on carnivore. You should check it out. I love meat. I mean, yesterday Lauren cooked a bunch of chicken. Like my favorite dish is when she'll cook like either salmon or chicken or whatever, and then just put it on top of a bed of like veggies, like carrots and peas. So good for you. Those are my vitamin pills, It's just like a can of veggies or, some nuts. AI spending still supporting. Capital intensive, allowing labor market to hold up. Expect the economy to continue setting the tempo for the rest of the world. Greater stability, blah, 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 blah. Rational exuberance. I actually think this is a red flag. When companies are saying, oh, no, guys, we're not irrationally exuberant. Things are actually rationally exuberant. Like, that just sounds like a good cope. This just feels like a contrarian bear signal when people are using previous bubble phrases and turning them into something positive, right? Like irrational exuberance is now rational exuberance. That seems like a red flag. Is now rational exuberance. That's an A. Exuberance. It just seems bad. All right. So the trend is your friend. Okay. Recession monitor, 20% chance. 20% is like indistinguishable from the usual chance of a recession per these institutions. Inflation to the sticky side, yeah, we know. Monetary policy, easy does it. Okay, whatever. Fiscal policy, big spenders. Government keeps spending money. Well, duh. Tariffs, the new normal. The fact that we're calling these the new normal, I just think is gross. I don't like it. AI, no bubble, no problem. AI adoption reaching its hottest, ample sideline cash, restrained margin use against dot-com bubble peaks. Yeah, everybody's shilling the upside. Okay. Bonds, steeper. Yield curve steepening doesn't seem great to me. We see equity markets re-accelerating following the current consolidation phase. Right. Commodities. I mean, you look at like silver and gold. It's been incredible. Somewhat meme-ish, honestly. Dollar down as Fed cuts. Private party. Private credit returns 4.5%. We're going long European carbon allowances. I talk about arcane, huh? These people are actually betting on commercial real estate debt. Franklin Templeton is literally going to bet on commercial real estate debt. That sounds like literally the worst thing to do with this kind of market. I can't help but think that will not age well. Like, oh yeah, let's go buy, office style debt, at the precipice of the economy either going up or down. Seems like the riskiest thing to get exposure to right now, but whatever. Diversify. Valuations look high. Wall Street says it's time to diversify, stay nimble. I agree. I think diversify is good advice. I like that a lot. Let's see. Let's see here. And agrees to... Oh, interesting. Somebody here says they've seen olive oil labeled olive oil, but then there are seed oils in it. Oh, that's crazy. Yeah, if it's labeled olive oil, it should just be olive oil, That's crazy. So anyway, all right, what else do we have here? Is that it? Yeah. All right. Well, that's somewhat entertaining. Let's go check out the boys at Zero Hedge. All right. So these are the top themes. Goldman is tracking. All right, let's go see what Goldman's got. Let's see here. And Goldman's outlook. Oh, yeah. The Wile E. Coyote scenario. We were just talking about that. Are they watching Meet Kevin? We were literally just talking about Wile E. Coyote. 2 days ago. That's too funny. U.S. manufacturing survey, which we just got from the S&P. Let's pull their numbers. Let's see how they're doing. U.S. manufacturing survey, 20. Oh, it's the 2026. Good Lord. I can actually label this crap correctly. All right. Oh, and I wonder if our deep think ever got back. Yeah, let's do that. Let's take a quick look at the deep think. Squirrel! And then we'll come back. So, our deep think. Okay, this is a very interesting phrase. So I added these charts. Do these screenshots I didn't attach originally but were part of the debate make any difference? This is the body camera footage of the crime scene. Oh no, I haven't read this yet, okay? We're gonna do this together. I'm gonna sit up in my, I don't know, it sounds juicy. This is the body camera footage of the crime scene. You ask if these screenshots make a difference. Yes, they do. They move the debate from narratives to hard evidence. And looking at the raw pixels, GPT wins decisively. Well, that's bullish. While Gemini correctly identified the risk, the cycle is aging. It's hallucinating the crash. I love how Gemini deepthink is saying that Gemini not deepthink is hallucinating. Different versions of Gemini making fun of itself. The screenshots prove that the panic Gemini described isn't happening in the price action yet. Here's the decisive breakdown. The lie detector test. Gemini claimed a liquidity accident, everything top. Evidence. Treasuries versus junk bonds are flat. The reality. This line goes vertical because investors panic sell junk and panic buy treasuries. The fact that this line is asleep proves that the credit event has not started. Gemini has called for a fire, but the smoke detector is silent. Fear-mongering check. Gemini says the uncapped repo facility is terrifying because banks might need more than 500 bill. 75 bill has been used, but it's nowhere near the cap. Fair. The cash out check. Gemini claimed smart money's cashing out, but they're really just barely off high. I mean, this is also fair. No sign of an institutional dump. Yeah, I agree with that. Generals are being shot and the internals are weak. Junkiest debt is underperforming. What is this? Drifting lower. This means the junkiest debt is underperforming quality debt, a sign of internal rot, the reality. These confirm the cycle is ending. The bull steepener caused by the Fed cutting rates is historically the most dangerous part of the cycle. The conditions are here for a recession, but we're just not at the event yet. So there is a sign of internal rot, and that's the junk versus the high yield. So no credit event. Yeah, I like that. I don't know. This is interesting. So we'll make a little note here. A follow up on last end of last year's AI debate on the market. Gemini Deepthink was enlisted to evaluate. It decisively says no crisis yet. Okay. However, flags the largest concern of rot is junk divided by high yield. Okay. So let's look at that chart. Let's go to J&K trading view, J&K. This is the high yield bond ETF called junk. And if I divide this by HYG, which is the high yield corporate bond, let's see what we get. That's where we get this drifting lower. But this has been happening for a while. And so how does this mechanically work? Well, it goes down, the ratio goes down. If I have, the bottom must get bigger for the ratio to go down, right? The bottom gets bigger. So that means HYG is getting bigger relative to J&K. Okay, got it. So let's screen grab this. It's not like this has recently, well, yeah, in 2025, 2024, it's certainly been on a weakening trend, but it's been on a weakening trend forever. Let's see what it's done in recessions. Okay, so we could really only go back to one recession here. We could really only go back to 2008. Yeah, this has been bleeding down since 2008, but it's quite stable. So, okay, I could see that. So it's a stable bleed down, but it's not a cliff, which is consistent with what we're seeing in the labor market. In fact, it's also consistent with my AI thesis because looking at the chart, J&K or HYG gaining faster than J&K suggests J&K continues to perform worse. This is consistent with smaller, junkier companies losing while bigger companies take most. No cliff though, like 2008 yet. It's just sort of a trend down. Okay. All right. That's interesting. Let's see what else it says. Final arbiter's ruling. Gemini is trying to convince you the building was already on fire. The screenshots prove that the building is standing firm. Gemini is right that the wiring is faulty. You now have a precise go, no-go gauge for your trade. Ignore the noise, the spikes in, movements in JPM or repo. Watch the chart. Your only focus should be IEI divided by HYG. If it stays flat, don't short. If it breaks 1.5, the rot has hit. So wait for 155. So that's this chart. So treasuries divided by these puppies. So if this line goes up, it means the bottom one is losing more relative to the safer treasuries. It's a little hard when you're looking at ratios to try to think of the directionality. But you can actually see it does spike in recessions. So this might be the leading tool that we could use. Let's jot on this, which is cool. I like having tools. Like our AI finder. Oh, somebody had such a nice compliment, by the way. This they posted this in our community tab. Boom. 2 deals found, 2 deals under contract. I've been using the AI app for the last 3 days, liking it a lot, looking forward to the updates. We're getting some, we're just in a very early phase of releasing the AI app. I cannot wait until we get our valuation stuff out. But people really like it so far, so it's really exciting. So thank you all. Sonny says, how much did Househack raise and you buy more house? Yeah, it's too soon to say how much we've raised because the broker dealer is still closing it out. I was showing this screenshot. This was a screenshot of my my thingy majiggy this morning, but or like a screen video of the notifications of money coming into Househack. 100K, 100K, 19K, 19K, 39K, 39K, 19K, 19K, 58K. 58K, 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 38K, whatever. Those are just still the things being processed from the closeout. And it does take a while for all that to go through. But all of that was $400,000 or whatever just this morning. So, but anyway. Okay, cool. So going to this, we were just going to talk about how, you see these spikes over here at the point of shock, right? These are recession shocks. That's probably, honestly, the moment to buy the dip. Let's actually go see. Were those buy the dip moments or did things get worse? It depends on what date. What is this bullcrap? Go away. Refresh. All right. So. Okay, well, that's unfortunate. IEI divided by HYG. Oh, I just saw it there. That one. Enter. Ugh. Why? Oh, because of the apostrophe. Oh, my lord. We will figure it out. Divided by. Enter. There we go. All right, so you did have a little spike over here, which is odd. November of 2008. Oh, yeah. February of 2009. That was the bottom. That was the bottom. March of 2020. Wow. I like that. That's very interesting, actually. I like this. This chart is fantastic. This is probably, frankly, a tool for when to buy the dip. So this tells you when people are freaking. So let's write that down. Feb 09, November 08, bottom Fed bailout. Right here, this sort of double top right here. And then, you know, this was just weird over here, but you certainly didn't spike anywhere near as high as these. And then over here, I'll get rid of the red arrow because we technically didn't have a recession there. And then here, this was obviously the March of 2020 bottom. So this could almost be a way to say, like, when to buy the dip, right? Or like when to back up the truck. So it seems like if I do, we'll call it the buy the dip line, is probably, what is this, about 165? Yeah, there we go. The buy the dip line. The buy the dip line. Right here. That's kind of cool because those were bottoms. All right. I like this. I like where we're going with this. We're actually cooking data. I like cooking data. This is fun. You know. Okay. So let's see what else here. Then we have somebody says QQQ forming a wedge on the day chart. Let's see what the Qs are doing. Q is still down 29 bips. Yeah, I mean, it's so hard because I have so many support lines here. I need to clean this up a little bit. But these are all very good lines that I like working. But I think what you're saying, I'll move that. If I go for, yeah, you're not wrong. Let's see what kind of wedge. I'm just gonna make it gray. Yeah. Also hard to see, like, directionally, if this is diverging in any way. I don't know. I don't know, man. I mean, the slope of the bottom one's certainly greater, but not by much. Like, visually, it seems a little too soon to tell. But yeah, that is interesting because it does, if this is true, this wedge, it does suggest a potential revisit to 577. You know, that this would just break down to here. Let me show that a little bit more visually. So if I do this, let's see here. This is just, you know, basic technical analysis here. Very basic. I prefer to keep it basic anyway because I think the more basic it is, the more likely it is to happen. That's sort of my thesis, that the reason technical analysis works so well is because the easier it is, the more people, you know, see the pattern. So this should probably make this a red arrow. What is with this? Come on. So it suggests this, which, if I go here, that would be about your 577 line. Yeah. Not great. But okay. I mean, could end up creating a buying opportunity. So, thank you for pointing out the wedge. I appreciate that. You know, nobody likes seeing a wedge. So it says, you rage quit. What was it? The coffee was bad? What? Does house care invest in daycare centers? No, we don't. We also don't take government money. Yeah, I was just having too much coffee, so I had a little coffee reset. Okay. So that's an interesting chart. I kind of agree with this deep think chart. So I think that was quite insightful. Now let's go look at the manufacturing PMIs, some of our early data. So new orders declined for the first time in a year. The year just started, but output growth remains solid. Employment growth strengthens. Well, that's bullish. Let's see here. Latest survey shows weaker gains in production amid renewed contraction in the new order book. The first in exactly a year. International sales fell. Let's see. Employment growth was sustained, with job creation reaching the most pronounced level since August. That's very good. Very bullish jobs. This and paychecks suggests we should have a good jobs report. Okay. Headline index from the report, seasonally adjusted. PMI was down. Weakest expansion from the manufacturing economy. Weaker growth emanated from a contraction in new order intakes. The decline was mild, nonetheless the first in a year. So unfortunately, this tends to beget bad hiring, right? Like hiring, if new orders stay weak, hiring will fall. What tax revolt? A reduction in demand led to weaker output gains in December. Softest in 3 months. Amid a reduction in sales, production increased sufficiently for firms to continue adding stocks. Rate of accumulation moderated noticeably. Which means production's down. Work outstanding declined for a 4th month in a row. I mean, none of this is good. So yes, oh, we just crossed 90K on Bitcoin. That's cute. Michael Saylor must be buying. So QQQ wedge, not great. Let's go to S&P manufacturing PMI. So what we have is contraction in new orders. This would be work outstanding down 4th month in a row. Okay. Work outstanding down 4th month in a row. Softest output gains in 3 months. Hiring was firm, though that may reverse if production continues to slow. Well, I should say new orders. It is bullish for the January report, though. A bullish Jan report, though. Okay. Then, what are some of the comments? Although manufacturers continue to ramp up production, suggesting goods producing sector contributed to further robust economic growth, prospects for 2026 are looking less rosy. Oh, they're saying the Wile E. Coyote. Something of a Wile E. Coyote scenario is developed, whereby just like the cartoon character continues to run, factories are continuing to produce goods despite a drop in orders. The gap between the growth of production and drop in orders is the widest seen since the height of the global financial crisis. Oh, that's terrible. That's really bad. Continues to run despite... Yeah, factories are continuing to produce goods despite suffering a drop in orders. Wow. That's not great. Payroll numbers will be adversely impacted if production capacity has to scale back, right? Well, that's not ideal. So let's see if they have charts on that. I'm sure they do. Like, I'd like to see what that looks like chart-wise. Manufacturers were upbeat, tariffs pushed up prices, higher prices, blah, 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 blah. Okay, where do I not have any charts? No charts. No charts. There gotta be charts. Hold on a sec. There gotta be charts. Where are the charts? S&P Global. S&P Global Manufacturing. Where's US? US. There it is. Oh, it's just this. Really? No more charts? That's crazy. Okay. I thought they would have had more. Oh, here Zero Hedge has a little more. Hard data, soft data, the survey. Ah, they're showing the spread between the two. Okay. Yeah. I mean, I think that's a good way to put it. You know, Zero Hedge, I think, puts this quite nicely. Okay, let's see here. This is basically the Wile E. Coyote moment. So we'll say Zero Hedge plots soft versus hard data, suggesting they should converge. Although I don't know, I mean, you know, you had this large gap over here as well. Well, and then it did end up converging, right? In fairness, the soft data started coming up and the hard data did come down. Hard data did come down last time, you know, over here. If hard data comes down, labor will follow down. So, a little poopy doopy. Not ideal. Let's grab that. Desktop. There we go. Okay. All right. Interesting. Repo operations, we saw those. Saw the doomers. Look at me, I'm the captain now. Yeah. No, you shouldn't expect to hear from the Supreme Court on tariffs until probably February to May. Somewhere in there. Private airports could beat snow delays. The profit motive would lead them to install heaters to melt ice on runways. Sure. Yeah. I mean, private airports can make a lot of money. Okay, but we don't really care about that. Another Trump tariff retreat. Happy tax cut New Year. Okay. Residents in 9 states will pay lower income taxes. Ooh. Oh, because of the SALT cap, probably. Oh, no, these are states cutting taxes. Oh, okay. Got it. Individual state taxes. Got it. So what is this? One of the striking contradictions of President Trump's tariffs is the way his course claims they're rousing success, even as he carves out hundreds of exceptions. Yeah. Rarely has a president worked so hard to cover the damage from his policies without admitting it. Yeah. His latest New Year's Eve retreat on the tariff on upholstered furniture, kitchen cabinets, and vanities. His planned 30 to 50% levities will now be delayed a year. Yeah. That's pretty classic. Well, that's good. Good. I like buying vanities without tariffs or lower tariffs. That's actually a funny line, though, from the editorial board. Editorial board on the money. On the money. You know, the tariffs are stupid. We all know that. You know, the economy is doing well in spite of the tariffs, which is great. But the pain they cause lasts. Trump impose higher tariffs, national security, killer love seat. Maybe the killer love seats aren't as dangerous as advertised, right? Because national security, we need to tax cabinets. But yeah, good for Restoration Hardware. I agree with you. Restoration Hardware must be happy. I agree. High profile bankruptcies, major company bankruptcies. Right. Yeah. Sonder, Spirit, Del Monte Food. Oh, Claire's went bankrupt. Really? Wow. That's actually a very interesting Business Insider piece. Thanks for sharing that. Hold on. I'm going to pull that up on screen here. It will take me a second to do that. Okay. Okay. Let's see here. Live stream. Oh, is RH up like 9%? What are they, like 180 now? We'll go look in just a sec. Qs are still down 40 bips. RH. Oh, wow. Yeah, look at that recovery. Yeah, good for them. That's cute. Target might be up on that too. Yeah, 2.4%. So, you know, they sell furniture too, obviously. There's a lot of stuff to talk about here. Okay. Furniture reprieve is no doubt intended to limit the price increases for consumers. The retreat is another string of policy consumers to mute the tariff harm to American consumers. First was the carve-out for smartphones. Right. Well, this is how he negotiates, and so he could pocket money. You know? Or new jets. So, you know, carve-outs. Smartphones. Then other electronics. Is carve-outs one word? Oh, no, it's hyphenated. Oh, okay, I didn't know that. Then farm products. And the $1 billion bailout. And $12 billion bailout. You know. Everybody wants an exceptions. Are you better off if you donated to the Trump campaign? Oh, absolutely. Yeah. Let's see what the comments are on this. As a business owner, planning has become impossible under Trump with changing tariffs. His changing tariff policies are policy. The policy is not policy, is lunacy. For those who support lunacy, ask why. Why would this not have been thought out before he set the initial tariffs? I'm confused. Why would Trump have to back off tariffs to remove prices since Americans don't pay them? Wait. We have to up it to 69. There we go. 69 likes. Lol. That's a good one. I like that. That's great. Lol. They're getting a spot in the Kevin data. They get their own little spot today. A slam dunk comment. No one wants to state the obvious. When it comes to economics and trade, Trump is an ignorant fool. There, I've said it. I'm not sorry. Very disturbing. National security is now under grave threat from sinister bathroom vanities. Yeah. Okay. All right. Enough of the comments. We got to get out of the comment section. This is too ridiculous. It's still pretty funny, but I gotta stop. All right. Enough. Too much logic. All right. So, what's this bankruptcy story? Let's look at high-profile bankruptcies. Let's see here. High-profile bankruptcies. So, we've got Spirit, Claire's, Del Monte Foods, CVS, subsidiary, Omnicare, Sonder Homes, Sonder or Hospitality. I don't think they're homes. Let's copy that on in over here. Give that a little citation. All right, not to be confused with the aircraft. According to data from the S&P Market Intelligence, which tracks public and private companies, bankruptcy filings climbed to 717,000. Or 717. Let me see if I can see like St. Louis Fred bankruptcy filings. Can I like? I wonder if there's like a chart of those. Not really. Number of business failures? No recent charts. All right, whatever. I'll just have to stick with this. 1717 bankruptcies through November 2025, up from 687 all of 2024. Bankruptcies. There we go. Highest annual count since 2010. Ah, interesting. Highest since 2010, 828. Industrials were the most affected, followed by consumer discretionary. That makes sense. Industrials, then consumer discretionary, most affected. Increasing number of small businesses carrying less than $3 million in secured debt. Yeah, that's the subchapter 5. Right, and this is despite the fact that they decreased the limits, right? So the limit, so subchapter 5, small biz bankruptcies up 10%. Despite ability to qualify being reduced by, I want to say it was like 3 divided by 5, which is like 40%. 40%. Individual bankruptcy filings are up 8%. Okay. Individual BK up 8%. That's interesting. Clean slate, liquidations, debt burden families, bankruptcy remains a critical path, blah, 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 blah. All right. That's not great. Let's close that puppy out. Okay, let's go see the information. Do they have any information today? Oh, did the 10-2 just go to 71? Yeah, that's not great. Predictions, stories, audio AI efforts. Tesla will acquire XAI. That's a prediction. I don't know how I feel about that. Because then you're literally taking, you're putting all of the money losses. You're making all retail hold the bag on all those money losses. I don't like that. But Michael Saylor's buying Bitcoin. And the Qs are still struggling, but look at Bitcoin. They're buying. Yeah. Why is Netflix going down? Netflix is going down because it's going down. The trend is pretty clear on Netflix, and we broke the downtrend. So we are now worse than downtrend. I hate to say it, but if we break 90 here, we're going to go to 77. Like, it is a little bit of a red flag that something that makes so much money is doing so poorly right now. Like, the amount of money they make is insane. It's just the lack of momentum is pushing them down. So, yeah, I mean, you're full round tripping to Liberation Day. You know, that's actually interesting to think about. For a company that makes so much money. Let's write that down. This was Liberation. May, April. Yeah, that was Liberation. That's right. So that was Liberation. And Liberation. Already a dirty downtrend is worsening. Now, if I look at their valuation, so if I go to the stock tab in the course member tab, I can go, so this is the course member only tab. If I go to Netflix's valuation, I've got them at 1.74. So 174 right here, peg, you know, suggest 2.69 divided by 2.69 divided by, yeah, this suggests 53% upside, but momentum continues to worsen. So it's a hard one to buy heavy, you know, suggests cautious nibbling and expecting it to go down more if you're buying is reasonable. You know, you just lower your cost basis basically if you're buying this puppy. Okay. Let's see here. Drop that in. Okay. All right, so what is this? Law firm in San Diego investigating potential security law violations against Restoration Hardware. I mean, that's the thing. You go public, you get sued, you know. It's just so easy to sue the public companies because they have a stock price that fluctuates on a daily basis. Yeah. All right. Almost everyone in Silicon Valley has found out lately, creating AI is a money drain. Well, not at Househack. We're AI profitable. I feel like it's the best kept secret, and I only share it, you know, with y'all. You know, we don't have VC or institutional or all this crap, but you know, there is a way to make money and not blow all your money on debt. You know, it's crazy. I mean, we're Right now, we're sitting at $15.5 million for House Hack. And I'm like, we just bought 11 properties. And we still have all this sitting around. But, yeah, just in our Mercury right now. What's our Mercury? Just the Mercury side. Oh, we just got more wires too. Oh, well, that's cool. Well, there's another 6 figures. But anyway, here, I'll just put this up on screen. And it's just to show, like, you know, people seem to believe in us. I mean, I obviously believe in myself. But it's a nice little testament, and I always want to be grateful. But this is just our Mercury. And then if you look here, in 2026, so this is, hold on, this is a mess. Let me clean that up. There we go. Okay, there we go. So in 2026, so just basically today, these are House Hack deposits, you know, month to date right here. And that's just literally today, which is cool. So, anyway. Mind you, the vast majority of that is sitting in the treasury portion of Mercury, so it earns the yield. But anyway, what is this? So, that's true even for AI businesses run by the world's richest man, and that's why I expect Elon will take a dramatic step next year to keep the money flowing to AI by selling the profitable part of his empire. By selling to the profitable part. Yeah! That's actually not... Somebody says, so your business is holding property? Yeah, we've got over $65 million of free and clear real estate. Yeah. So it says spy and Q's looking to U-turn. Well, since we've been going down, I hope that means up. Yeah, getting a little bit of a recovery there. That's nice. That's cool. That's cool. Good. And that's pushing up BT Sis as well a little bit. All right, very well. Let's keep going here. Between the cost of competing for top-tier talent and building huge data centers, XAI has enormous cash needs, and it's burning a reported $1 billion per month. Wow. That's crazy. Hold on, let's write some of this down. Tesla to acquire XAI prediction, and then slap that in here. In my opinion, this would be terrible. You know, I was anti. I have been and still am anti Tesla buying shares in XAI. I think Elon is out of money at XAI. I think Elon is out of money at XAI and desperate to beat Sam Altman. So the information suggests XAI is reportedly burning $1 billion a month. Now, what's Tesla's cash flow? I think it's a couple bill a quarter, or maybe even less than that now. Tesla. Let me get my Tesla file here. Tesla Q3. Here we go. Open. So I've got 18.7 billion of cash. And my cash flow at Tesla in Q3, which was a great quarter, was here. Let's explain this. Okay. This will make sense in just a moment. There we go. So Tesla, with the major Q3 bump due to expiring 7.5K, had an average of 1.33 billion per quarter of free cash flow. I expect that to decline, and this should be an opinion. So let's see here. I expect that will decline after Q3. If Tesla averages 1 billion a quarter, that's three. That means XAI is burning 3x burning money 3x faster than Tesla can generate it in free cash flow. However, Tesla has $18 billion of free cash. Free cash. So that helps, but potentially robs Tesla of money they should, in my opinion, use for more superchargers, more megapacks, and more like new models, right? Like, I love models, okay? I really love models. The models are great. Okay, right. So that sort of reiterates my Tesla frustration. But anyway, going back to this prediction here. Company has trapped outsiders to buy NVIDIA chips, but XAI is going to need mind-boggling amounts of money in the coming years to stay competitive with leading AI firms. XAI is going to need mind-boggling... Yes, I agree. Google and Meta have core profitable businesses. OpenAI and Anthropic have far bigger businesses selling their models. Meanwhile, Tesla has more than 40 billion, right? But that's not free cash, right? You can't look at the 40 billion of free cash because it's not 40 billion of free cash. It's 18 billion of free cash because they have bills to pay. Another option is XAI, but I see that as less likely. Well, they have an IPO coming up as well. And then regarding restrictions regarding immigrant engineers. Yeah, I agree with that because of SpaceX being, a critical... the info doesn't think SpaceX will acquire them due to immigrant workers, an issue for a security clearance company, which that's reasonable. IMO, SpaceX also shouldn't screw up their IPO, by injecting this money loser. This makes sense on several levels. Tesla's fallen behind. XAI is disappointing, but Tesla has a huge edge from data. XAI needs to scale. This person thinks XAI will go public. This person says, I don't see anything in the numbers that suggest they can go public. Well, yeah, they'd get sold. I feel like people would liquidity dump. All right. Interesting piece. Possible scenarios into 2026. Generative AI will start to look like a fad. Yeah, I actually think that right here is a very real risk. Now, I love AI, don't get me wrong, but I do think it's overhyped. It's good at what it does. Flash crash. What is this? The Black Swan event. Flash crash. Different financial. Often. Blah blah blah. Older machines. Blah blah. Blah blah blah. As these systems develop more and more, they could interact with each other adversarially. Debt-fueled financial disruptions. Yeah, AI debt's a problem. Syria. What is this? A psychosocial freefall? What the hell is that? Oh, where you can't prove what's real and what's not? Well, just get off X and go outside, dumbass. Sorry, I shouldn't say that. Like, scrolling on X is like the most depressing thing you could do. Like, if you want to be happier, uninstall X. Okay? That'll make your life happier. Because it seems like now every time I open up X, all I get is people saying, hey, Grok, can you take the clothes off this girl? Grok's actually really good at doing it. But that's not good. It's not good for psychology. Blah, 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 blah. All right. Okay. Reuters. Outside, the most reliable news source. Yeah, you know, they actually say that to pilots as well. You know, OpenAI to buy Pinterest. Oh, wow. Wow. Yeah, Pins has gotten very cheap. That's going to skyrocket the stock. If that's true. The volume's coming in like it is. $18 billion company. Dude, OpenAI doesn't have $18 billion to spend on them. Where do you see this? I don't know if that's true. Is that just a rumor? I mean, you're spamming it. I'm about to put you in timeout because you're spamming. I'm already responding to it and you're still spamming. But, OpenAI, they want to... Oh, according to the information, OpenAI is predicted to buy Pinterest. Oh, did the information just post this? They must have just posted this. Pinterest becoming AI slop. I actually agree with that. Where is it? Is it in this story? Oh, well, I see the Pinterest. Oh, there we go. This is just a prediction. I don't think they have the money to do this. Okay, so that's just a rumor. Random prediction slop. All right. Elon Musk's AI chatbot blames safeguard lapses over child sexual images. That's not good. Trump, the Iran protesters, Lagarde. I wonder how much she does get paid. 4 times more than the Fed chair? Wow, 726,000 euros? Oh! Wow. That's a nice salary. That's crazy. Guess it pays well to be a central banker. I mean, she's also like a spokeswoman for the, you know, the Eurozone. But that does seem like a lot. Let's see, what do we have here? Huh. Japan's Goldilocks. Forget bubbly promise of AI. The seductiveness of semis. Japan's most revealing stock market or stock story of last year was found in the aisles of the supermarket chain. The Goldilocks crisis. This is just about some random company. Okay, whatever. 40% discounts on luxury goods. Up to 40% of luxury goods were sold at a discount in 2025. Rising levels of discounting have pushed industry margins to a 15-year low. Wow, really? That's interesting. That's very interesting. Luxury. 15-year low margins. Somebody's saying valuation on Salesforce. I think I've done that. CRM is sitting at a 1.53 peg. It's actually cheap right now. So this is a cool thing. Like, if you guys are part of the Alpha membership, you should know this. You just go in the app, put in Salesforce, and then here's my last analysis on it. They're paying off debt. They have enough cash to pay off all debts. They're buying back stock. They're paying dividends. Excellent gross margin. Should be a solid cushion if there's a downturn. And, they're only at, a 1.53 peg, suggesting that, there's quite a bit of upside in the stock. But then obviously there's more to it. This is why I like my stock tab. It's just, got a question of stock. If we've analyzed it, it's like, boom, we pull it up like that. Knockdown price. Okay. Consumers are turning to outlet stores. But products are also more expensive because of inflation, after COVID, blah, blah, blah. Let's see what people say. Brands are switching to China. At least Hermes stayed true to his roots and maintained high quality standards. The goods in the outlet stores are designed to be sold in the outlet stores. They're totally different from the New Season's high quality but obscenely overpriced goods. It's a double scam. Probably. I mean, yeah, that makes a lot of sense that the outlet stores would just, they're totally different manufacturing lines. The truth about affordability. Oh, I love this. The Economist I usually align quite a lot with. How often do you update the stock analysis? Every single day. Every day we do a new analysis in our alpha reports and the stock tab. The Economist on affordability. Yeah, so let's see what we have here. Rage baits. Okay, Democrats, now in Europe, reposting American memes. Affordability is a funny term. Blah, blah, blah. Successful economies are filled with tensions like these. Politicians will naturally say what they need to win elections. If the only downside of affordability was that voters punished incumbents for high prices, that would not be so bad. Yet if the problem is misdiagnosed, the risk is more harmful policies will be introduced to fix it. Right, exactly. The Mamdani effect, honestly. That's because talk about affordability mixes phantom concerns with real ones. People are sensitive to prices of things being at an all-time high. A gallon of milk costs $3, now costs $4. Food prices have shot up. However, wages are growing faster than prices on both sides of the Atlantic. In a sense, there is no affordability crisis. Wow, in this sense. Assuming the average wage, of course. Besides, nobody really wants prices to return to 2019 levels. If that were the goal, policymakers should imitate Greece after its debt crisis when it suffered a depression and deflation. Yeah, and this was really bad. Deflation is often a very depressing time. I mean, you remember when they went through the sovereign debt crisis in Greece, they couldn't even collect the trash because they were, going through so much austerity. So I'm going to say, Economist evokes sovereign debt crisis and austerity in Greece, circa 2012 2013, probably 2014-ish, to suggest deflation sucks. More to the affordability story. As societies grow richer, share of spending on goods shrinks. Blah, blah, blah. Shocked by services. Inflation. Real wages have risen, not as fast as assets have gone up. The wealth to GDP ratio keeps spreading. Blah, blah, blah. Fundamental problems of affluence, not of economic malaise. That makes them tough for economies to solve. Basically, yeah, rich getting richer is a hard problem to solve. Right. Sensible policies is hard. The danger is politicians go to price controls. Right. Basically, economic wealth gap increasing is hard to solve, but price controls make things worse. Totally agree. American economy will see a boost from tax cuts, sending out checks to some taxpayers. Hard to think of a combination of policies better designed to raise prices. Right. Sticky thinking, and you're basically back at the 70s. Self-harm policies. Affordability crisis could become another story. Repeated facts be damned. That makes it a trap. The populist rebellion. Yeah. Hard to think of a policy better designed to raise prices. Raise prices than to place new taxes on imports and then give people free money with which to buy them. It seems like the economic lessons learned in the 70s when we introduced price controls, abandoned them, must be relearned, and that could be painful. Yeah, I totally agree with the economists. Totally agree. Very well put. Let's slap that in. Okay. What's your opinion on the theory that the Fed is purposefully allowing the devaluation of the US dollar in order to be able to pay down its national debt? Well, I don't know. I mean, most of our debt is held by Americans. I don't know about that. The value of the dollar tends to fall as rates go down anyway. So I don't know about that theory. I don't know about that. All right. Well, at least there's a lot to talk about today. My face was half burned. This was so sad. This fire at the bar, and where's the Swiss Alps? Les Constellations. People were dancing to pop music. Let's go. Celebration turned to disaster. Ceiling was on fire. Didn't see what caused it. Yeah, it was like the sparklers or whatever. Grabbed his jacket, rushed for the exit. So many others, leading to a scrum of bodies on the stairs, all trapped below ground. I saw my hands decomposing. I felt like I was on fire, but there was no fire around me. Ouch. That's when I saw my hands, skin hanging off the sides. My face was half burned. I could tell my hair was burned. Ouch. Friends drove him to a hospital half an hour away. Ugh. That's crazy. That's so sad. Flashover is common and a deadly phenomenon in which a fire in an enclosed space spreads rapidly, causing nearly everything in the room to ignite nearly simultaneously. Wow. When a flame in a room is not quickly put out, hot gases rise to the ceiling and spread the heat throughout the space. Temperatures can rise as high as 1,000 degrees Fahrenheit, a point where everything in the room starts burning at once. All the wood, the seats, the decoration, everything in the room would be heated to ignition temperature. Oh. 5 minutes. Even a firefighter in full protective gear would be unlikely to survive flashover. Those temperatures are well beyond what you could get away with breathing. Ugh. Scary. Sprinklers can stop fires from reaching that point. I don't know that I ever really want to live in a house without fire sprinklers anymore. And unfortunately, I think the vast majority of Americans do not live in homes with fire sprinklers. Fire sprinklers are such a life-saving device. I'm a really big fan of fire sprinklers. Big fan. Bigly fan. Especially since most people don't replace their smoke detector batteries. But anyway. Let's see. What else? What's going on over here? The condo market? Somebody says insurance companies will F you with sprinklers. Why? Who is rich enough for sprinklers? Well, I mean, the sprinklers, are like mandated by code in most areas now for new construction, right? I mean, fire sprinklers started coming around in like the late 80s, early 90s. You really started seeing them. They hate water damage and failures. Oh, well, sure. Yeah. Yeah. The condo market hasn't been this bad in over a decade. Condo prices this fall post their biggest decline since 2012. Condo prices. Oh, the Florida condo market. Yeah, sure. Condo owners are struggling with the worst market in more than 10 years. Prices for condos. I don't like buying condos. Posted their biggest annual decline since 2012. Single family prices have slowed, but they're still up from a year ago. Yeah. How interesting. Single family winning again. Condo market reflects the way preferences are evolving. Downtowns are less attractive. Yeah. Condos are popular in second home markets, which are less desirable. Higher insurance premiums. Also true. Maintenance costs are going up. The rise in HOA dues. Yeah. Sure. In 9 metro areas, more than 25% of condos were estimated to be worth less than their recent sales price. Yeah, I believe that. Single family, meanwhile, continued to edge higher. Oh, I love it when we edge up. That's a very interesting differential here in the real estate market. That's quite interesting. Yeah, these are all very interesting points here from the Times. Let's write down some notes. Somebody says, I'm in Ohio, I never see sprinklers in houses. Do you know what they look like? You should see them in like new construction and stuff. House in Washington has sprinklers built in 2011. Yeah, you all totally should have sprinklers. Sprinklers are great. When you go buy a new home, you can get a place with sprinklers. They're fantastic. I love fire sprinklers. All right. Anyway, so where were we? And contrary to popular belief, fire sprinklers, only go off where the fire is. It's not like, if there's a fire in here, and where's my sprinklers right there, only this sprinkler would go off, not the whole house. That's the point. So New York Times on condo collapse. Interesting. Never sprinklers in Texas in new construction? Are you serious? House built in 2020 didn't have them in Central Oregon? It could be codes. Austin House doesn't have, bought in 2014. Wow, that's crazy. Yeah, maybe it's just a California thing. I'm pretty sure as of 1994, we're going to fact check this. My guess is 1994, sprinklers became statewide mandated in California. When did fire sprinklers become mandatory in California? 2011. 2011. Okay, so what states mandate fire sprinklers? What? Oh, I didn't know that. Oh, wow. Only California and Maryland mandate fire sprinklers. Wow. Most states leave it to local jurisdictions. No frickin' way. That is interesting. We don't use sprinklers in residential homes in Georgia. Yeah, okay. I guess not. I guess I just think they're so normal because of California. Kevin, as a firefighter, I've seen way more damage in sprinklered homes from fires. Yeah, I mean, water damage is hellish. Don't get me wrong. Like, property damage-wise, I get it. This is about life-saving, right? And I got 7 children here. I love my fire sprinklers. They give me a lot of peace of mind. Somebody says overregulation. I don't actually think it's overregulation. I actually think every house should be built with them. You know, retrofitting them is very expensive, though, and it's very rare. You're typically not going to see it. But, wow. We will see big layoffs. Almost all orgs have overhired in the last 4 to 5 years. S&P 500 companies before AI hype buys? Yeah, maybe. In Illinois, they're only required in what would be considered rich areas, like over 4,500 square feet. Oh, wow. Wow. Okay, I didn't know that. I did not know that. That's very interesting. Yeah, I guess that's the California in me, right? Like, I just think that's normal to see fire sprinklers in newer homes. And I get pissed when I don't see fire sprinklers in homes. Because I dislike fire that much. Yeah. Anyway, let's go back to this condo collapse over here. So, NYT suggests condo prices are falling faster due to HOA dues rising from inflation and costs and insurance, as well as lower desirability for second homes or urban locations post-COVID. I agree with that. So, fire bad. Yeah, exactly. Kevin's California showing. That's okay. That's okay. I really like California. I don't like Gavin Newsom. I think he's an idiot, and I hate LA. But I actually think California is a great state. So, 25% of condos, 25% of condos in 9 metros worth less than last sales price. Wow, that's crazy. Fire sprinklers are not made to put out fires. They are for helping the fire not to spread. I don't know about that. I think a fire sprinkler can rapidly put out a fire. Rapidly. Like, if I had a fire right here on this desk, this room would get doused and everything in here would be destroyed. Like, I want to be clear about it. My beautiful Bionicles would be destroyed. Actually, the Bionicles would probably be safe. Dude, check this out. Check this out. I haven't shown this yet. But, shout out to McKay. McKay got me, like, the coolest Christmas present ever. McKay found OG Bionicles in the bags. Still in the bags. How sick is this? These are like 20 years old, you know? Still in the bags. And we got all of them here. So I'm really excited about this. So my Bionicles would be safe. But yeah, I mean, the firefighter's right. The water would cause way more damage. The water would cause a lot of damage. But if I was sleeping in here, I'd be alive. You know, I wouldn't burn to death. You could get me all wet, all you want. I just don't want to die. All right, so 25%, 9 metros worth less than, right, we saw that. Condo owners are struggling with the worst market. Single family holding up. Imagine the damage done if it's a false alarm. Well, fire sprinklers don't false alarm. They're not. I mean, they could break, they could leak, but they're not like a sensor. They're not like a smoke detector. What they are is they're glass, with some kind of chemical in the glass that expands when they get to a certain temperature. Whether that's 140 degrees or 160 degrees, kind of just depends on whether it's in the garage or inside of a room or whatever. But like if the ceiling of my room got to 150 degrees, let's say, that fire sprinkler is designed to break. And the purpose of it breaking is opening a pressurized line of water. It's probably sitting at 120 psi or whatever. And there's a limit. You don't want the pressure to be too high because that can increase the risk of failure, right? But yeah, that breakage then releases the flow of water, and then you got to go manually turn it off. That's why there are fire bells to help somebody to go turn the damn valve off. But anyway. Most people don't know that. Why is that bell ringing? So cut the price to $295,000, which is less than pay. Let's see, November. That contrasts to 4.5% for houses. Okay, that's interesting. Compares to just 4.5% for houses. Okay. I picture Kevin looking like Obama riding a bike, helmet, knee pads, elbow pads. No! I am so beat up from skiing, though. I'm not riding a bike anytime soon. Okay, so let's see. The market has really gotten slow. This is for condos. Difficult for buyers to get mortgages. Yes. Yeah, lending is a real issue. One bedroom unit, Park City, Utah. Wow, for 5 months. Park City's very expensive. And they just lost the Sundance. I can't believe it's going to Chicago. Quieter streets linked to an increase in home price. No duh. Condo co-op system is broken. Yeah. Association fees go up, blah, 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 blah. Yeah. Lending, it's harder to get like FHA loans. Harder to get FHA loans in condos as well. Need FHA approval, but HOAs are bad at investing in those, approval processes, which can take a while. So, somebody says it's the difference between fire sprinkler and fire suppression. Fire suppression systems and commercial paint booths are awesome. Yeah, and there are different kinds of systems as well. Do your sprinklers cut off the power when they go off? No. Nope, they don't. Yeah, there are cool systems where you can, like in data centers, they use gas, which is a problem if you're in there because then you can't breathe, Somebody says SoFi is ripping. Is that true? Retail coming back? Yeah, SoFi is actually having a good day. 4% today. Saks gonna file bankruptcy? I agree. Let's see here. Saks. Yeah, I mean, I think some regulation is good because I actually think like regulation that requires smoke detectors or fire sprinklers is good. Now that increases the cost of a home. And so the free market typically wouldn't demand that, right? The free market is generally not going to demand fire sprinklers. But that's actually where I support government intervention to say, no, like, you should pay for it. It is better for your family and your children. Yeah. Wow, Saks missed the debt payment. Yeah. shunt to kill the power. Yeah, sure. Yeah, because you don't need power to operate the fire sprinklers. What's actually interesting is that you mentioned this. I did this like 10 years ago. I ran a cable from my fire bell to an I/O switch in my panel over here. I never did anything with it, but technically if my fire bell goes off, I could put that into like a Raspberry Pi or something and send a notification to my phone that my fire bell is going off. So I could basically turn the dumb alarm into a smart alarm. I ran that cable when I did this studio. I'm like, what's it gonna cost to run a 30-foot cable? That's, just like a little 18 gauge wire. It's not a big deal. And so yeah, if current goes through there, I could pick up on that, and then theoretically I could then, if I had a smart breaker, which I don't have, but if I had a smart breaker, I could then kill power, right? So yeah, but I'm not gonna do that. I don't have time for that. I used to tinker with that kind of stuff because it's really fun. I love electricity. Saks prepares for bankruptcy as for missing debt payment. Oh boy. So that's the issue with sprinklers. They don't stop electrical hazard. Absolutely. Yeah, absolutely. I do agree with that. I agree. I agree. So, does a hotel require sprinklers? Probably. I mean, if you think about it, have you ever been to a hotel where they have those signs on the wall, like, don't hang your clothing on this fire sprinkler? Because some idiots actually will put a clothes hanger through the fire sprinkler and break the tube and all of a sudden flood out the hotel room. It's like, it's like literally an IQ test. It's quite shocking, or should I say quite soaking. That doesn't sound right. Anyway, I guess Saks is going bankrupt. Rumor. So missed debt payment. Somebody says, why are there so many stipulations when trying to invest in house hack? Regulation. See, we're very rare in that we are a PCAOB audited Regulation A exempt offering. That comes with, a lot of rules and a lot of compliance. And we actually think we do a really good job with compliance, which is important. I think it's great. I mean, PCAOB audits, they cost us like 60 grand a year, and that's actually probably cheap compared to how much they usually run. But I think that's because we do pretty well with our books. But that's usually something only public companies will do. And that's one of the things that people complain about with being public, is it's so expensive to meet all the regulation. But yeah, man, you got to go through the bullshit because of transparent regulation. It's not like a rug pull meme coin, it's an actual investment. Saks has struggled financially since taking on the debt burden in 2024. Luxury retail chains delays in paying vendors have contributed to weaker merchandising offerings. Oh, it's the doom loop. So, delayed paying vendors, then revenues continue to decline. Now missing debt payments. Chapter 11 BK expected. No, it'll be a while before the Meet Kevin app or Reinvestor on desktop, but we're working on it. In addition to our valuation model, we're working on our agent release for the Reinvest AI. So that way so if you're an agent, you'll be able to put your clients in it. That'll probably have, at some point extra fees, but, because we were adding users, right? But, agents will be able to put their clients in and then like custom brand notifications like, Walter just sent you a deal, right? In your zip code or price range or whatever, along with like price filters and stuff. Like there's a lot we have to work on. I have a question about no property tax in California. Well, I don't know what your question is. So planned highest profile department store bankruptcy since COVID. Saks failed to make interest payments on more than $100 million of bonds due on Tuesday. Wow. Wow. That's crazy. And they're also monetizing their balance sheet, which is a red flag. You know, once you start selling your good assets, it's usually a red flag. So they are selling off their good assets and just missed payments on more than 100 mil of bonds. Wow. Let's see here. Hawk Tua has all my investment cash. Yeah, she rugged you, didn't she? Yeah, she kind of disappeared, huh? I mean, what a way to go out. Quick little crypto rug pull. I mean, what a way to destroy your reputation, though, you know? It's a scam. I hate to see stuff like that. So, but people do that, you know? Scam out for a quick buck. They don't think about longevity. One sec. Sorry. A little oopsie doops I wanted to fix there. That's fine. Just one of our fixer-uppers talking to the drywaller. But everything's good. Plumber's made a mess, basically. Cool. Okay, that all looks good. All right. Sachs has struggled to pay vendors, which have held back shipments. Bonds have moved lower. Claude was right. Sell everything. I think you mean Gemini, but yeah, I know what you mean. Are there no comments on this article? I like the Wall Street Journal comments. I guess not. That is interesting. Sachs CEO steps down. Oh yeah, that's always how it starts. It's 10 o'clock already. Wow. Okay. What else? Condo market. We talked about that. Talked about the fire, flashover, 10-2 spread. 71 bips. It's not good, my friends. Magnificent 7 shares fall. Stocks wobble. Blah, blah, blah. Tesla no longer a top EV producer. Crypto thieves move offline to terrorize investors at home. A surge of brutal home invasions. And, yeah, wow. Violent attacks. I want to be clear, I own no crypto. Oh my god. Three hooded shadows rushed in. Pressing a handgun to her forehead and an AK to her neck. They demanded to know where her phone was, a computer, and how to log into her crypto wallet. We're gonna kill you if you don't give it to us. What's your password? Wow. Yeah, because you could make the money disappear much more quickly, right? After selling some rental property she managed, she invested crypto and saw her net worth leap to $3 million. Then came the targeted hack. 17 mysterious transfers that cost her 90% of her life savings over 4 minutes. Wow. Wow. If we can't hack them, we rob them. Holy smokes. What a line. What a line. So what are the numbers? More than 215 crypto attacks, with 2025 almost double. Wow! Many victims choose not to report crime out of fear that they will expose them to repeat offenses, or because they lack law enforcement's or a confidence that law enforcement can help them. Wow. That's quite interesting. Crypto robberies up double in 2025. That's quite wild. And so this is a Doomberg piece. Scary. Okay. All right. What else? Challenger, we don't have that yet. Warren Data, we don't have that yet. This is old. Axios, what are they up to? Trump threatens military force. We saw that. We saw this. Okay, anything else in the info? The information. Data centers use clean agent fire suppression gases like inert gases. Keeps electronics safe for some time. Right, but doesn't that... But you can't breathe that, right? Because it displaces the oxygen. That's the whole point. So it, like... Yeah, it's great for data centers, but it's bad for humans. So you got to get the hell out of there when that alarm goes off. Trump says jobs market is booming for U.S. born. The data doesn't show it. Well, Trump wouldn't understand data if it bit him in the butt. For Trump, things are whim, not data. Certainly not data that disagrees with him. Trump says American workers are winning, but the data doesn't back that up. Let's see what the data is. Trump administration recently said more than 2.5 million U.S.-born workers gained jobs in 2025 as 1 million workers left the workforce. But economists on both sides say they have seen no evidence of Americans getting jobs by the millions or Americans going into jobs they left. In fact, data shows U.S.-born workers are doing moderately worse under Trump than they were under Biden because the labor market has weakened, partly because of the slowdown in immigration. Unemployment rate is rising for both sides. Yeah, I mean, I don't think we need to really go too deep into this. We already know the labor market is softening. It's just narrative building for what's it called? Narrative building for midterms. And it's fugazi, but whatever. Okay. Oh, sorry to hear that, Hinton family. I got crypto scammed for over 330K. Yikes. Oh, sorry to hear that. Kevin, this is Jan 3, 2022. Yeah, that's not good. That's not a good thing to say because the market went to crap after that. Fewer immigrants are in the workforce, blah, blah, blah. What else? Share of immigrants fallen. All right, we know. We know. What a longevity expert eats in a day. Cardiologist. Well, let me guess. Okay, this is going to be my guess. Okay, we're going to make this guess together. I'll just use this as a little notepad here. Guess. Okay, ready? So, like, if I was going to put together a longevity list of foods, I would do salmon, quinoa, nuts, fruits, veggies, obviously, berries, eggs, whole wheat, flaxseed, right? This is like my diet. Chicken. Let's see what they say. I don't know. I haven't read this. So, what do they say? Research, SoCal, they found genetics played almost no role in their exceptionally good health. Wow, that's actually bullish. Kale, I'm growing kale. I ain't eating kale. But I will try it when we grow it. Walnuts are great because of the omegas in there. Walnuts are fantastic. Although Max is allergic to walnuts. I fed Max walnuts and almost killed him. Apparently he's allergic to walnuts. He's fine. It's all fine. Now we have EpiPens. Leave it to Dad to figure it out. Yeah, Mediterranean diet. Olive oil, fruits, veggies, nuts, seeds, seafood, poultry. Wow. Wow. What did I write? Fruits, veggies, nuts, salmon, chicken. The only thing I missed was olive oil. Let's freaking go. Avoid the ultra-processed emulsifier, sugar, salt, sweeteners. Yes. Yes. Totally agree. Look at that. Salmon. They specifically mentioned salmon. Fruit, plants, vegetables. I mean, this isn't a secret. It's a Mediterranean diet. It's fantastic. A Mediterranean diet is brilliant. Yeah. Blueberries. See, I even specifically said berries. Blueberries, strawberries. Nice. Let's go. There are the walnuts. Somebody else mentioned that. Obviously, all nuts. That's great. Look at that. We nailed it. We did it live. I don't know how we ended up on this, but I'm a big fan. Yeah. Where's our thing?
Kevin is very talented, but I don't know if it's going to be him, but he's a very talented guy.
Sorry. I had to. All right. What else? The info. Let's go to TechShare slide. Let's see what they're saying about the slide. Somebody says, what about rolled oats? Well, oats are, a type of whole grain. I don't think there's a problem with that. Then the problem with oats is we have to add a lot of sugar to make them, like, palatable, right? I think oatmeal is great. I mean, I'm not a nutritionist, but I think oatmeal is fantastic. Macadamia nuts, yeah. Wild-caught salmon, yeah. All-time highs, Jan 3, 2022. Yeah, maybe. Yeah, wild-caught salmon tastes very fishy. But yeah, you get theoretically less of the, metals, the toxic metals, the mercuries. Because when you have it makes sense. When you have farmed fish, you're recycling the same pool over and over again. There are potentially greater risks of metal contamination. But, I mean, I would make the argument that the benefits probably still outweigh the risks for fatty fishes. People like salmon because it's fatty fish. I'd like to order some sushi today. I'm going to text Lauren that really quick. That's a great idea. Let's do some sushi. Let's get some mercury. Sushi today. There. Okay. Tech. Weakness in big tech. Cautious footing. Software stocks were amongst the biggest decliners. They may be fully invested going into the new year. Yeah, that's been my take. Is that, people are out of money. This aligns with my belief. Confirmation bias. So I will say my confirmation bias is that, retail stocks peaking like Hood and SoFi are a bit of a red flag, in my opinion. are one red flag that people are fully invested, right? Yeah. I dated a girl, her name was Sushi. That's funny. For some reason, Costco wild caught are extra fishy. That's funny. That's where I've tried it. Yeah. Yeah, I believe that. Huh. Okay. CapEx could fail to pay off. Yes, we know. Everybody's bullish. Shocks regarding interest rates, treasuries, blah, blah, blah. Bloomberg says seasonality offers little guidance. Deutsche Bank suggests the Supreme Court will rule on levies. Fed's in focus. Equity markets could get choppy, over-reliant on AI success. Yeah. Okay. Let's close some of these tabs. We don't need this many tabs. Too many tabs. 10-2 yield curve. That's probably the worst thing I'm seeing here. Only a 15% chance of a rate cut right now as well. Actually, I think it's fallen below that. Odds of a rate cut right now, yeah, 14.9% right now. Huh. Okay, cool. What else? It's because the sockeye you get from Costco has been poorly processed and frozen for ages. Oh. That makes logical sense. Okay. Cool. Well, the Qs keep bleeding. I think, unfortunately, we might be trending towards 607 here. And, you know, the near-term technicals are a little crappy with the catalysts coming up for jobs. Although I don't think the jobs are going to be that bad, the jobs report. I think the current estimate is 55,000. Let me see. Let's see here. Economist. Let's see. We have estimates for next week. Still 55K. Yeah. Yeah. Okay. All right. Good. What else? We saw the Tesla numbers. Just going through here. Yeah, that all looks good. All right, good. Cooking. Yeah, the estimate, 60K, it's true. Oh yeah, Netflix will probably keep going down. That doesn't surprise me. Tesla's almost at my target of 333. Well, I mean, the break even is much lower, right? So I don't think you're going to get anywhere close to 200,000 or 300,000 jobs anytime soon. No time soon, really. Okay, cool. So we looked at that. We looked at the manufacturing survey. We looked at paychecks. Good. All right. I guess we could go through this. There's a lot of data here to go through. I should put all the Tesla stuff in one spot. and then we can talk about this. So, Tesla. So, we've got the Tesla info. We've got obviously the yield curve, along with what we're seeing in the S&P manufacturing report, which is quite interesting. Yeah, okay, cool. All right, so a lot to break down here. We can do a summary on this. What do you think about Mamdani approving for nonprofits having the first dibs on purchasing properties? Well, it'll lower the price that sellers will be able to realize for properties because you're limiting the buyer pool. So, and then actual home buyers can't take advantage of that because only nonprofits would. Yeah, that's interesting. I mean, I think it's another, doinking with the free market, and I think that's bad, but I don't know, whatever. It's not my problem. Okay, so okay, cool. Rearrange this a little bit, and then we'll do a little summary here, a little sum. Cool. Somebody says we ain't living in New York. Yeah. Well, I don't know. Different life. I'd live in New York, not with 7 kids. Okay. Oh, how's silver doing today? Let's go look at silver really quickly. Gold. Silver's still sitting at 70. Oh, volatile, huh? Yeah. There's that volatility. Somebody wants to know if I really have 7 kids. I guess you haven't been looking at my Instagram stories. So you follow me on Instagram at @meetkevin, you'll see them all. They're kind of fun. No, he doesn't have 7 kids. He has 7 wives. Oh no. All right. Let's do a summary of this. And you don't have IG? Yeah, well, that's your problem. You got to get IG to follow the Meet Kevin stories. Yeah. All right. Sum this puppy up. A lot of numbers this morning. All right. 2026 is already starting with a bang. The New York Times is talking about a collapse in condo prices. The retailer Saks of Fifth Avenue is expected to file bankruptcy as they just missed payments on $100 million of bonds. Tesla missed deliveries, loses the lead to BYD. Meanwhile, every institution on Wall Street is really bullish, with the most bearish institution on Wall Street right now, neutral. on stocks. Yes, the most bearish Wall Street institution going into 2026 is just neutral. That's the most bearish read. It's crazy. So let's break down what the heck is going on here, starting with probably my most favorite of all time leading indicator, and then we'll get into the details of what's going on with condos and real estate and Saks and Tesla and AI, and there's a whole lot going on. So let's break it down. First, we've got to look at the 10-2 yield curve. This is probably, I hate to say it, but the thing that makes me the most concerned, just because it's historically been a harbinger of recession. And, you know, we've heard this story before, but today is special because we're starting the year with it rising again. So you should really understand this chart, and then I'll also show you where buy time is. So the orange line is the zero line here, which basically means that the yield curve, the spread between the 2-year and the 10-year, has gone negative. You don't really have to know what that means. You just have to know that historically, every time it goes negative and then goes positive, we tend to have a recession, including the one I didn't chart over here in 82. Okay. Or even over here, 80. You actually had a double recession right here that I didn't chart, and it just reiterates this curve. But the point is, the moment we actually went into a realized recession in 1991 and 2008 over here, or you know, the dot-com bubble over here in 2000, the COVID recession, obviously, which came very, very quickly. Every single time we ended up being in a realized recession, the spread between the 2s and the 10s crossed 1.25 after being under zero. And as you can see, this is now rising consistently. We have consistently been rising in 2025, and we are starting out 2026 at the highest level we have seen since the last recession, which is a little odd. We're at 70 to 71 this morning, and every single time we crossed 125, we've been in a recession. Now, maybe this time will be different, but there is a way to sort of track when the buying opportunity is. And what you could do is you could take the difference between treasury bonds and high yield. Now, this is a ratio, so it's a little bit more complicated. You could jump to TradingView and just do IEI divided by HYG. So basically, treasuries are safe divided by high yield. And when the lower end loses value, the line goes up. And so it's a way of examining shock. And as we could see, we clearly had shock in November of 2008, your first spike. February of 2009, that's when the market really bottomed out and the Fed bailed everything out. And then you had another spike over here in March of 2020. And it seems like the buy the dip line is over 1.65. So once we panic and you know, crap basically breaks, the glass floor breaks and shock actually happens, the buy the dip line is about 165, or above that you tend to be in buy the dip territory. Right now things are very calm, but that's really because the labor market hasn't rolled over yet. Now the problem with this is we have a new sort of leading tell that came out this morning, and it's the S&P Global Manufacturing PMI. And this was a little problematic because what we actually see right here is the S&P is saying that we are experiencing a Wile E. Coyote scenario that has developed, whereby the cartoon character continues to run despite chasing the roadrunner off a cliff. In other words, they say that factories right now are continuing to produce goods, even though new orders have been plummeting. In fact, the gap between the growth of production and the drop in orders is the widest gap that we have seen since the height of the global financial crisis back in 2008. Payroll numbers will be adversely affected if production continues to get scaled back. Now, this morning in our Alpha report, we did a deep dive on Paychex. And Paychex indicates that so far they're still not seeing recession indicators and that the labor market has been relatively stable through 2025. You know, we do deep dive fundamental analysis every day in the Alpha report and the course member live streams, and then, you know, we put it all together. Anyway, the point of this is they're not seeing that spike in layoffs yet. This makes sense. which actually suggests the 55,000 jobs that we're forecasting for the labor report that comes out next Friday. The next week we have a lot of catalysts. ADP on Wednesday. I think Thursday we get challenger job cuts. Then we get the jobs report on Friday, next Friday. The week after that, we get CPI. We have a lot of catalysts coming up, which obviously could be problematic and could be why we're seeing this bleed in the Qs. Could also be a little bit indicative that, when we zoom in to this wedge pattern that we're forming on the Qs over here, it probably kind of begets on a technical basis that we could fall as low as 577 pretty quickly on the Qs. That's not ideal, but it's just sort of a basic technical analysis here. Here's that wedge pattern zoomed in. And we could see that this wedge could beget a 577 return on the NASDAQ 100, especially in the face of this data potentially coming in worse than expected. But so far, Paychex doesn't say that's happening yet. And the U.S. Manufacturing Survey says it's not happening yet either. In fact, they say that employment growth was actually sustained into the end of 2025. So it's bullish jobs, but we're seeing a renewed contraction in the order book. And this is that gap, that Wile E. Coyote moment. In other words, things are still going like everything's booming, but the foundations are really starting to crack. Like the economy is sick. It's just a matter of time for us to see how sick the economy will actually be. And so we can make this conclusion here. We can deduce that if new orders stay weak, then obviously hiring is going to fall. It's just a matter of time for hiring to fall. And this is a problem for markets. This isn't good. We don't like this at all. So we can actually now combine this with what we've got going on in other sectors, like what's going on in the condo market or what's going on with Saks Fifth, or even just luxury goods. Luxury goods are suffering. In the luxury market, we are seeing discounts at luxury, the level, to the likes of which we haven't seen in quite a while. Luxury, the stat is luxury sales are at 15-year lows in terms of margins, which obviously not good. Bankruptcies are rising. In addition to Saks Fifth being rumored to now go bankrupt, you've got Spirit, Claire's, Del Monte Foods, Omnicare, the Sonder Hospitality bankruptcy. None of that is great. On top of that, we're seeing more bankruptcies year to date through November. That's when they cut off these numbers. It should go, the year's over. We should see it all, but we don't right now. So year to date through November, we see the largest bankruptcies that we've seen since 2010. So worst levels of bankruptcies since 2010, 717 through November of 2025. That's up from 687 in 2024. Industrials, consumer discretionary is most affected. Chapter 5 small business bankruptcies are up 10%, despite the ability to qualify for a Chapter 5 bankruptcy being down 40%. And individual bankruptcies are also up 8%. On top of that, we're seeing sort of like capping out on a lot of retail stocks, which suggests some retail or like exhaustion in people's ability to buy stocks. Look at Netflix. Netflix is a cash cow machine. On a valuation basis, they are 53% undervalued, but the technicals are horrible. The downtrend has been known for weeks, but we actually just broke the downtrend to the downside. So like the downtrend is worsening on something that is often seen as a safe haven play. Now, on top of that, you're obviously also seeing, softness in some other retail names, whether it's Hood or SoFi, popular with retail. Retail's right now chasing things like silver, which has topped out, and currently memories like SanDisk and Micron. But, you got to know that if you're chasing SanDisk and Micron, you're chasing the last leg of the cycle. Like Micron and SanDisk statistically do well and historically do well when you're at that end phase of euphoria. Now, of course, Wall Street doesn't care. Wall Street is just re-rationalizing how they're calling, what they're calling what's going on in the market. Now, I always think of this as a problem. So, back in the day, we actually called what was happening in the market in the dot-com bubble irrational exuberance. But now you literally have Wall Street analysts saying, we're not seeing irrational exuberance. We're seeing rational exuberance is what they're calling it. It's actually DWS who said that. The problem with this, though, is when you start redefining what was the red flag the last crash cycle as actually a good thing, you're basically arguing that, oh, well, this time's just different. But maybe it's not, because even in the collapse of 2008, condos fell substantially faster than home prices. This is why at House Hack, I'm a big fan of just single families, as much single family as we can get our hands on. But the New York Times is now suggesting that condo prices are falling faster due to HOA dues rising, inflation costs, insurance, as well as lower desirability for second homes. But if you go to the front page of the New York Times right now, they're talking about this sort of condo collapse and how condos are actually doing a lot worse right now in valuations than what we're seeing. Hold on, let's get it here. New York Times, condo collapse, prices falling faster than single family. They're actually showing that single family is up. It might be the Wall Street Journal. That might be why I couldn't find it on the Times. It's the Wall Street Journal that had it. But condo owners are struggling while single family homes are still rising in prices, albeit at a slower pace. Single families rising, at a pace that's still positive. You've got 4.5% of single family homes estimated to be worth less than their last sales price. Whereas if you look at condos, 25% of condos in 9 metros are worth less than their last sales price. That's kind of scary. And some of that is because of demographic changes, people trying to move out of urban areas, work from home post-COVID. But a lot of it is also just the impact of inflation, and it's harder to get FHA approvals for first-time home buyers in condos. Condos are usually much more sensitive to the economic cycle than single families are. Now, what's interesting is you've got Fidelity saying that, right now, the defining theme is still AI, but they also mention that there are global fragilities. And I think the fragilities are really what we're seeing in things like the repo market. The repo market, the Fed is trying to brand this as, oh, don't worry, these spikes keep getting larger. Even though we've turned off the vacuum cleaner of money, don't worry, this is all normal. I mean, they panicked over here when repo started to get used, the repo operation started to get used. They panicked. They're like, you know what, we're going to turn off the vacuum cleaner. Well, even after turning off the money vacuum cleaner, the repo market is spiking higher than it ever has before. Now, maybe this is all because of, money leaving banks and going to the Treasury General account because people are paying their taxes, and that's why the repo facility is getting used. But, it's either that's a fair explanation or liquidity is truly drying up. Problem is, as liquidity dries up, you tend to see less money to chase names like Netflix or Tesla or whatever. One of my calls recently in the Alpha Report when Tesla hit 500 was that we would be heading back to $433. And a lot of people are like, oh, Kevin, you're just being a Tesla bear. Why do you keep saying it's going to go back to $433? And I'm like, this has nothing to do with me being a bear or a bull for Tesla. It has to do with basic technical analysis. This sucker's going to go back to $433. And since I've made the call, we have gone basically straight down to $437. And I think we're going to hit $433.99. That's a very natural next phase line, especially on this Tesla delivery numbers that we just got, which we could talk more about in just a moment. But, I think it's worth also remembering that at the same time we're getting some of these liquidity constraints, maybe retail is fully allocated, which, some institutions are starting to recognize as well. Maybe people went into the year fully allocated. The yield curve is, basically skyrocketing, which is not good. But, when you put all of this together, it kind of makes sense why you're also seeing Saks at Fifth miss their bond payments, which is somewhat scary. We don't like to see companies go bankrupt. I mean, in every cycle, companies are eventually going to go bankrupt. This is normal, and it's kind of healthy for companies to go bankrupt, but it's also a red flag. So, all of a sudden, the CEO of Saks just stepped down. Pretty sure that's front page of the Wall Street Journal as well. Yeah, there it is. Saks CEO steps down ahead of expected bankruptcy filing because the company just missed payments on $100 million of loans that are due to bondholders, and payments were due on Tuesday. They missed their payments. And people are saying that there's a doom loop that's basically happening here, where when they stop paying their vendors on time, their vendors don't give them supplies, their revenues go down, then they have even less money to pay their bonds or their vendors, which then leads to even less inventory on the shelves. You basically have no choice but to get squeezed into bankruptcy. Now, at the same time as all of this, Donald Trump is cheering that everything is fine, but the problem with that is everything's not fine. And the editorial board, made a pretty solid slam, I would say, there on Donald Trump, because they're like, hey, Donald Trump is retreating yet again on tariffs. One of the striking contradictions of President Trump's tariffs is the way his chorus claims they're rousing success, even though he carves out hundreds of exceptions. Rarely has a president worked so hard to cover the damage from his policies without admitting it. So Restoration Hardware is up like 9% today because Trump finally decided to U-turn on 30 to 50% tariffs on vanities, kitchen cabinets, and upholstered furniture, leading the editorial board to say, I guess killer love seats aren't as dangerous as advertised, or vanities, or whatever. And so, the editorial board is like, at what point are we just going to keep causing more problems? Because you're like literally trying to fix these problems of your tariffs by carving out smartphones, electronics, farm products. And the way you're doing it is by offering $12 billion bailouts for farmers, stimulus checks for certain people. You're expecting to offer potentially more stimulus checks in 2026. People in the comments section are sort of roasting him for making it very difficult for businesses to operate in this sort of uncertain environment. Here's a classic comment, though. Very disturbing. Our national security is now under grave threat from sinister imported bathroom vanities. How could Trump back off this important measure, endangering us all? Obviously, there's a lot of facetiousness in this. They're not meant to be taken literally here. But yeah, I mean, it sort of plays to the joke of like, hey, like at a time where individual bankruptcies are up 8%, small business bankruptcies are up 10%, despite the ability to qualify for those being reduced 40%, which is a bad sign. People kind of running out of money being fully allocated to the stock market. It's not a great time to doink with the economy even more with all the tariff drama, although we continue to get more exceptions, and we probably won't hear from the Supreme Court until February to like May on tariffs, but I think what would be great for the economy would be getting rid of tariffs. Anyway, that said, people are running tight on money, and Tesla is no exception to this. The information is now predicting that Tesla should actually acquire XAI, or that they might end up acquiring XAI. Now, I personally think that would be a terrible idea, and I've maintained this. In fact, I encourage people not to vote for Tesla to buy shares of XAI, because I think Elon Musk is kind of running out of money at XAI, despite him being desperate to despite him being desperate to beat Sam Altman and having a high net worth. Most of his net worth is in illiquid valuations at SpaceX and Tesla. Now, if we actually look at the financials for Tesla, the financials at Tesla on the cash flow statement, they're very good. I mean, Tesla has $18 billion of free cash, $40 billion of cash minus bills they have to pay. So they've got $18.7 billion of free cash. They have generated in the last 9 months about $1.3 billion of free cash flow per quarter, which works out to about $400-ish million per month. The problem with this is XAI is expected to be burning $1 billion per month. That's not great, because that means XAI is burning 3 times as much money as Tesla generates in free cash flow. And I actually think Tesla's free cash flow will decline. We just had, 418,000 deliveries, which is not great, not terrible. We don't know how many of those went to SpaceX, but, cash is a problem. Tesla has $18 billion of free cash, but if XAI comes in, they're going to burn this. And what I think Tesla should be doing is they should be installing more superchargers, better superchargers. They should be doing more megapacks, more megapack production, more battery storage production. They've got high margin and 29% gross, revenue growth over there. I think it's fantastic. They're doing 29% more gigawatt hour deliveries than they did last year. This is a great growth vertical at high margins. even though they're just repackaging Chinese batteries. It's a great business model. And they should be focusing on new vehicle models, damn it. I don't think that they should acquire XAI, which is a cash-burning business, to compete with some egocentric bullcrap competition between Elon Musk and Sam Altman because they hate each other. And I also don't think SpaceX is going to end up screwing up their IPO by buying XAI. So maybe the information is right, but I hope not. I actually think it would be a really bad catalyst for Tesla to blow up all their free cash flow and destroy the core of what makes Tesla Tesla. You know, Tesla just burned me on $4,000 of credits. I looked on New Year's Eve. I wrote a little note down. I'm like, check my Tesla credits to make sure they don't expire. I opened up my Tesla credits. I already saw like 1,000 of them expired, but whatever. I had $3,900 left. And then it said, your next expiration of $750 of expiring credits expires January 18th or something like that. And I'm like, cool, I got 2.5 weeks to go spend some money. So I was gonna buy like the Under Armour thing for the Tesla Cybertruck. Well, no, on January 1st, I look at it, all my credits are gone. They rug pulled all of my credits. They just made them disappear. So then I asked the little AI chatbot that they have in the Tesla app, I'm like, hey, give me my credits back. And it's like, oh, email customer support. So I email customer support or service or whatever it is at tesla.com, and then I get an automatic email. This email is not monitored. So I go back to the chatbot, I go, you gave me an email that doesn't work. Meanwhile, when I click on the email, their app crashes, so I had to manually type it in, whatever, small issues. And then the AI chatbot is like, oh, I'm sorry. Here, call the customer service number. Like, come on, Tesla. Like, why don't you guys focus on actually, like, taking care of the people who, like, have shilled your business for years? And then why don't you do what has made you guys good? Make good cars. And not, you know, chase this fad of AI. It drives me nuts because I don't think Tesla, like the fad of AI, when I say that, like large language learning models, I think that is a fad. That is a massive fad right now, and you don't want to throw money on that, at that, in my opinion. Like functional AI, I'm a big fan of. Functional AI like full self-driving, or like house hack AI, great. Functional AI, but not LLMs, man. Don't chase that. Don't blow your money on that. That's crazy. But whatever. So that's just my little Tesla rant. But again, their numbers not great, not terrible. So what else do we know? 418,227 deliveries, year-over-year sales down 8.6%. BYD is eating their lunch. BYD is up 7.7% in year-over-year sales, 4.6 million deliveries, 2.26 million pure battery electric vehicles. Meaning BYD has just surpassed Tesla as the largest, EV manufacturer. Now, moving away from Tesla for a moment, it's worth considering what The Economist just told us. So The Economist just told us, jump into The Economist over here, the truth about affordability. So are you, hi live stream chat. But yeah, the truth about affordability. The Economist makes a really good point. They say that politicians will naturally do what the polls tell them to do. And the problem is that you end up introducing more harmful policies than you fix. See, my opinion is that you should get the government out of a lot of things. Like you want to fix Minnesota childcare fraud? Stop having the government allocate money to childcare. Let the free market run the childcares. When the free market runs the childcare, they don't turn away customers. Wow, imagine that. But anyway, so, if you look over here, The Economist argues that if you want deflation, what you end up causing is a sovereign debt crisis like what you saw in Greece, and you suffer a depression and deflation. So, even though the wealth gap is rising today, people's wages are rising more than inflation is rising right now. And the best thing to keep this economy going is not to tax it or to create more government programs or to send stimulus checks. The best way to keep the economy going is to keep the government out of the free market and not make the mistakes of the 1970s. That's at least the take of The Economist, which I'm actually inclined to believe. Now, at the same time, you've got the Washington Post dumping on Trump because Trump is saying that, oh, we're creating more jobs for U.S.-born workers, gaining 1 million jobs or gaining more than 2.5 million jobs as U.S.-born workers gained more jobs in 2025 as 1 million immigrants left the workforce. But we know the unemployment rate has been rising, and unemployment data has been getting worse, not better. Washington Post and Economist are pointing that out as well. I mean, this isn't a surprise. So this all gets to the bottom line out of all of this. The bottom line out of all of this, which I'm going to show in just a moment, comes right after I show you a big thank you. This is what I saw this morning, a bunch of money flowing into HouseHack. So it seems like people have money because, just the first banking day of the year, we're already over $540,000 into the account today for people, people's investments finalizing for HouseHack since we closed the fundraise, which is kind of cool. Thank you. I just want to give a big thank you to everybody on that, and people are loving the real estate AI, which is also very cool because we had a really nice comment this morning. Somebody left, boom, 2 deals found, 2 deals under contract. I've been using the AI the last 3 days, liking it a lot, looking forward to the updates. We got a lot of updates coming, which we're really excited about. But I think the bottom line out of all of this is actually this warning that one of these economists gives. And what they say is right over here. Market participants aren't necessarily cautious. However, they may be fully invested going into the new year. And that's a little bit of a problem. Because if everybody is fully invested and margin debts are at the highest level that we've ever seen before, it makes me wonder, hey, like how sustainable is growth for the economy if it's predicated on the market holding it up? Tesla's going down to 433. But yeah, if you look at, the Qs, we had a rough morning over here, fell off the cliff again, going down to 607. I mentioned that if we lost 617, we'd be going down to 607 on the alpha this morning, and to be cautious because volumes have been so low and liquidity seems to be very, very tight. But the biggest issue that we face right now is that the liquidity concerns in private credit end up moving to the stock market. Because if the stock market goes down, that's the only thing that's holding up CapEx spending, which is the only thing holding up hiring or any semblance of hiring. And then you have problems. Then you have real big problems. So I don't want to start the year off bearish. But I have to say, consolidating all of this research, I do think I probably have to lower my bear bull scale. So my present bear bull scale, let's go ahead and pop it up. So my present bear bull scale, which we use this tracker because I think it's good for people to see. My bull bear scale has been relatively consistent. This is my bull bear scale. It's been mid fives. We jumped because of ADP weeklies, and you could read it. You could pause and read it all here. But we've been relatively consistent in the mid fives, and I think it's a really good tracker. But I will actually update this right now with you here. And we're going to say for the start of January, I'm actually going to go down to a 5-1. And that's because I'm seeing tight liquidity the last week might be more than seasonal slowness. If allocations and debt are maxed, the ability, stock exhaustion will set in. That will lead to forced layoffs as money becomes even tighter. Saks bankruptcy and missing payments on, $100 million of bonds is just another early warning sign, in addition to all of the other bankruptcies that we've been seeing. Individual bankruptcies, small bankruptcies, big bankruptcies are all rising. The yield curve steepening is by far the most concerning evidence. As we break 071 on the 10-2 and trend towards 125, we are running towards recession, not away from it. And so this does sort of reduce me on that bear bull scale, which again reiterates why I'm cautious. I'm not bearish, sell everything, short everything, but cautious is the name of the game here for Meet Kevin. And again, I just want to be so grateful for all of you, because by no means do I want to come across as oh hell, look at us, look at the money we have or whatever. I just want to prove to you that I put my money where my mouth is. And so this is our HouseHack Mercury. I love the app, by the way. If you've never used Mercury for business banking, I highly encourage it. I'm pretty sure I have an affiliate link for them. Yeah, there you go. Banking done right. Go to metkevin.com/bank, and then you get a $200 bonus. I don't know what their affiliate link is. there's some kind of bonus if you go there. But this is our Mercury. And so, so we have, this is our cash balance at Mercury. I think in total we're at about 15.5 in cash right now, and it's mostly money markets, like the House Hack Treasury or the Mercury Treasury account, which gives you like a 3.7 yield or somewhere between 3.7 and 4%, something like that. We're kind of sitting on this cash from the fundraising now, and we're like, all right, this does position us to be quite defensive. And not only expand our AI offering, not expecting AGI, right? Just with the AI that exists today, providing a great quality product and service. But we're AI profitable, and my goal is to keep it that way. I don't want to turn into a drunk sailor like XAI or OpenAI and spend blindly going into 2026. We're going to keep the money safe and be very, very conservative. And so I think my bear bull scale, for all the reasons we've just enumerated in this segment, really align with that. Now, I understand a lot of people look and they say, Kevin, isn't there an opportunity cost to being heavily exposed to cash? Of course. And don't get me wrong, I mean, we just bought 11 properties and we think we got great deals on those properties, and we think we're really insulated on those single family purchases that we just made. We think all of them were below market value, way more than what we spent to fix them up. Knock on wood as we finish these out. But I'm not highly tempted to dive into buying. I usually am not in Q1. Usually Q1, Q2, I wait. I don't buy. I usually only buy in the third and fourth quarter. But raising cash and diversifying is I think very, very smart right now. Somebody here in the chat says, Kevin, why did the market tank? I think it's just there's an exhaustion. Somebody says, Kevin, you nailed 2022. You warned everybody on time. Well, thank you for saying that. So I know we had a little bit of a talk about fire sprinklers earlier. We don't need to go back into that. So that has a ripple effect. Now the bondholders at Saks Fifth aren't getting paid. Does that have a downstream effect? Sure. Well, yeah, like if bondholders at Saks don't get their distributions, then they have less money to go buy the stock dip or whatever, right? I personally think a red flag is Netflix. Because if you look at the week chart on Netflix, when you lose the downtrend, it really shows that what was used to be deemed safe is no longer safe. And again, I think their valuation is very low, and I think the same of Meta. But I'm also cognizant that we could also just be going into a bearish time of for the stock market. So when your most bearish analyst is neutral on stocks, to me that's a contrarian sell signal, which is not great. So I do see that as a red flag. So we'll see. Now I know that Bitcoin had a nice little jump over $90,000 today, but you also have to be very careful using Bitcoin right now as a catalyst, mostly because Michael Saylor has typically been associated with buying every single week, and he keeps marking new highs. So he tends to buy, and then a few hours later, Bitcoin just retraces, and then he's upside down. He doesn't buy wedge deals. He does the opposite. He pumps the market when he's buying, and then the market slips out from under him. So he's really buying at a negative every single time he's buying, which is great. He's actually creating negative wedge deals. He's giving somebody else exit liquidity. It's really incredible. Here's a question. Wow, $20 donation. Thank you, Mountain14406. I have a question. So I open up a Hive and Forgery. I don't know what any of that means. I buy SpaceX, OpenAI, and so on. Do you know if it's legit before I put funds into it? I don't know anything about Hive or Forge or accounts or whatever. I mean, what I've seen a lot of companies do is they'll have special purpose vehicles where they'll get an allocation and then they kind of they lay over their own fees. I'd just be cautious about buying at some of these valuations. Look, I hate using this phrase because I just don't define myself as like a venture capital guy, but I have a venture capital fund. We briefly opened that up to Reg D investors. It's not open right now, but we invested in Apptronic, which I think is like 4x'd since our investment. I don't know, ballpark. I mean, I'm saying this on a quick live stream here. And we invested in SpaceX, which I think is also like 3x or 4x. I mean, we invested like a $300 billion valuation, and now they're talking about $1.5 trillion for an IPO. It's crazy. That's like a 5x. I don't know. But anyway, I wouldn't pay those valuations. I think those are very scary valuations, but I can't give you personalized advice. I've never heard of those companies. Just watch the fees. The fees get really, really disgusting. Yeah, somebody says, what's a Reg D investor? Fair. I will explain an additional lesson for everybody. So a Regulation D is a form of an offering that is only conducted towards accredited investors. So having like $1 million plus net worth, or I think it's over $200,000 of income, or $250,000, I can't remember. That's different from a qualified investor, which would be over $5 million of a net worth outside of your primary residence. And then there is a Regulation A offering. Regulation A's are a little bit of a pain in the ass. You have to have a broker-dealer involved. That's what we're doing with HouseHack. It's open to non-accredited investors. Well, we just closed it on the 31st. But that requires a broker-dealer, a lot more KYC, a lot more, review, limitations in terms of how much of your net worth you can invest, stricter disclosures and financial filings. And then, of course, we're PCAOB audited as well, which is extremely rare for a Reg A. But when you hear those phrases, that's what that is. Those are private offerings, essentially. So that's... I use these words because they're so used to, I'm so used to talking in that lingo, but I have to be careful to remember that, not everybody has taken all of their FINRA licensing tests, right? So anyway, thank you for asking. Millions in Pokemon trading cards. Yeah. I mean, you can calculate your net worth however you deem fit. Actually, for a Reg A, you calculate your own net worth. Ironically, for a Reg D, we calculate your net worth. A little different, huh? That seems backwards. But anyway, somebody says Elon doesn't care about cars anymore. That's just his side business. That actually makes me very disappointed, because I'm of the mindset that we should have the Cybercab. We should be focusing on a box van Tesla. We should be focusing on a minivan and new models. But if Tesla buys XAI, it could, unfortunately, and this is hyperbolic, but it could be the death of Tesla, because all of that cash that they've built that should be utilized for making the core business that makes money better, they would end up throwing into a money-losing business and giving up their moat. I'm very, very, very disappointed about that. So I find that very, very sad. But anyway, yeah. I mean, look, this is my first video of the year. I do want to reiterate, I appreciate all of you having watched my my last video of last year video. I am going to maintain the promise of no sponsors for the foreseeable future. So the only thing that you're going to hear from me will be the occasional, hey, the coupon's coming out. We don't have a coupon right now. The only thing you're going to hear from me is the occasional coupon expiration, but HouseHack's fundraise is over. No sponsors. I don't really care about affiliate links. I put them up mostly because I think sometimes there's a big benefit to you. I don't get any benefit out of the cash one that I was talking about the other day, but I know that you do if you use the product. So I'm I don't, use anybody's link you want. I actually think, ironically, my Tesla affiliate link is back. I was just looking at that. I went to metkevin.com/Tesla, and it looks like they opened it back up again, which is really funny because they just rug pulled all of my credits, and then they opened up my referral link again. Because the referral link was Kevin's order is maxed out, use somebody else's link. And I guess my referral code is back after they stole all my referral credits. So I don't know how to feel about that, but I think there's some shystering going on here. What are you going to do? Yeah, it's shady. It's 100% shady. I wish I took a screenshot of the New Year's Eve, where it said it's not going to expire until January 17th or whatever. I actually might have an email of it. But anyway. Yeah. What's up, Kevin? I'm painting at work and listening, trying to change my wealth. Let's go. Hey, man, keep building the skills, build the business. Yeah, I was telling somebody the other day, if I was 19 years old, let's say, and I didn't have a family, I would go to both college to learn machine learning, and I would work the trades. whether that's being an electrician or a plumber or whatever, because then I hedge AI, but I also get the upside hedge. I upside hedge AI by being into potentially developer, work from home, remote work, right? Which I could do outside of my trade skills. But then if AI takes over without me, I have my trade skills. I actually think that's what I would do if I were 19. I think those hard physical skills are really valuable. Being a pilot, electrician, plumber, HVAC, framer, whatever. But also being cognizant and capable in and versed in artificial intelligence, machine learning, weightings, neural nets, weightings for neural nets, I think is fantastic. Somebody says, Elon gutted the Consumer Protection Agency so he could do stuff like that. Yeah, big irony about that is the Consumer Financial Protection Agency actually just got ruled by the courts, I can't remember if it was federal appeals or the Supreme Court, that they need to be funded. So the CFPB will be back, which is very interesting. You made a video like that a year ago saying the same thing about no ads. Yeah, well, actually, if you actually listen very closely, that video was made in 2022. And I said that for the foreseeable future, we won't have ads. And if you actually look, for about 2 years, I took no sponsors. Yeah. So I made a promise and I committed to that for 2 years, which is certainly more than foreseeable future, right? So, I think I was incredibly honest about that. And then there was a period where, we had ads again over, I think, late 2024 and 2025. But for the foreseeable future in 2026, we're not going to do ads. I don't know how long that's going to be, but for a while, you won't see sponsors, right? Like YouTube's still going to put in their ads. But, that unfortunately, that's always the thing that people miss is like I could say, a certain time frame and then I could commit to it for years, but then they only hear what they want to hear, which is, I thought you said no ads forever. It's like, well, I never said that. But people forget that. So, fixing people's impressions is always challenging, but that's okay. Somebody says, we need a watchdog agency for exactly your issue. Yeah, I mean, I feel scammed, right? If somebody says, don't sue him. Yeah, I'm not going to sue Elon. Like, I don't care. But I do feel scammed. Like, I have been a Tesla shill since 2017, and I feel like I got rug pulled out of, $4,000 of credits. And, in fairness, like, does it really change my life? No, of course not. But, I just think that's like a sign of the business having, like, if you need to rug pull your customers, like, that's not a good look. So I'm a little disappointed about that. But anyway, so we'll see what happens with the queues here. Hopefully we can stay off of 607, and we'll leave it there. So thank you all so much for being here and watching, and we'll see you in the next one. Goodbye and good luck.
Kevin is very talented. But I don't know if it's going to be him, but he's a very talented
Kevin's somebody
guy.
we consider. Kevin is fantastic, too.
I think that Kevin's a brilliant guy, and I think that we'd all be very lucky to have him.